Good morning. It is September 5th. Hope you had a good Labor Day weekend. We're going to be streaming stocks, options, futures trading today. And it is Tuesday on a short week. We're going to be looking at SPY, BBBYQ, BBYQ, GME. Looks like HSDT's gapped up. Up is up. Good day trading some SPY options. Fubo's up. Looking to maybe grab a call here. Waiting a little longer though. We do have this kind of woke up. Anyways, sub up, like up, comment down. Happy Money sticks around. You can follow us on Twitter at HappyMoneyYT. And we have a Discord server. Link for both of those are in the description. Put the Discord link. I still have this cough. Okay. Link for Discord. Oh, my computer's lagging. What's going on here? Oh. Browser lag again? Oh no. That. Sorry for my tardiness this morning. I had an emergency. Everything's good, but couldn't make opening bell. Like SPY is down a little bit. We'll gap up. Do we have data today? 5th. Factory orders at 10. We had that. Tomorrow we have trade deficit, PMI numbers, SM, beige book, dead speakers. Barbecue's down 14%. It's like GME was rallying up this morning, which is kind of odd. But look at that, it was rejected right at the resistance line once more. So a little pre-earnings exuberance, I think. What's tomorrow, huh? Is it after close? No. HSDT is up 64%. Barbecue 14. I'm thinking just some consolidation really after the rally on Friday. This isn't a problem to me. If we do break this trend, we'll start to get concerning. But so far it looks good, unless there is news that's causing this. I feel like the only news that would cause much price action on barbecue would either be very bad or very good, so probably not a small move like this. Fubo's up almost 10%. Yeah, SPY's still kind of rolling over. As you see there, it's right on that trend line. So we might hold this today. If it starts to break through here, then expecting a little bigger pullback before potential gap fill. Maybe move back to the 50 moving average. Unless it holds this this trend, then we can just keep going up from here. Consolidation time over. Oh. Bubblicious, I wasn't late. I've been here all morning streaming Waiting for you guys to chat. You guys have been so quiet. Really messed up, making me talk to myself all day. Come in, I put in the hours, put in the time. You guys don't show up till 11:15. Good morning, Guts. Good morning, Bubba. Back from Blue River. How'd your Suburban do, or Yukon? Auto drive pretty nice. Auto steer bounces around. Still the same deal? Yeah. Pinballs back and forth. That's too bad. I was hoping they would have gotten that better. So it's basically just a lane keep. It's probably a little better than the lane keep. The lane keep was pretty bad. Yeah, a little pop on liquor too, that's true. Got a Zoom call this morning. Morning, Dink. 6 spies. Making its way back down. Kinda got a double top here. Could be a cup and handle, could be a double top. Zoom's up. One more resistance line for Zoom to break out of. Oh yeah, liquor. That is a pretty good move actually, looking at the chart. Broke through that resistance. See what kind of levels it can actually hold though. Doesn't have to hold. So also see where barbecue flattens out at. Gotta figure something out here. F. Making its way back down. Get a bounce on VWAP. A little close to other cars going on curves 85. Yeah, that's where those things sketch me out. The autopilots. It kind of hugs the middle. You're doing 85 around curves, yeah. What the heck? That's crazy, Bubba. Whole body massage? Or kitchen? Is the way. Views of the 14ers. That is neat. Barbecue. Bet we get a bounce somewhere around here on this trend line. Got VWAP back up at 2364. Settles somewhere a little higher than where it is now, probably. GME kind of came down. VWAP, it's up 3.5. Not a bad bounce. 100% on Friday puts. Yeah, that's nice. I know, that's what I like about trading the overnight. Yeah, because overnight you can just, especially on the futures, get a position and then just close it in the morning. Just have a stop on it, break even or whatever. What is GNS doing? I keep putting that in my title, but it's kind of died out. Nice little bottoming here on liquor. Good. Holding some 447 puts. Yeah, you have enough time. Kind of right on that trend, so either grind up on it or we're gonna break. And maybe today could be a big down day. So far we've made a cup and a handle for some confirmation on a bounce. That's just not a double top. I'm a bit more immobile right now, so might be a little slow for stuff. Let's see, where's the 450, 16? Oh, yeah, it hit right on that 50% actually. I think. Very interesting.
A little bit more from where it's been trading today. But he's calling this Oracle a multi-year growth opportunity, seeing a multi-year opportunity for solid growth at high margins. And he believes that this is going to be driven by the combination of the better software as a service and of the cloud offerings. Now, the cloud offerings and the software as a service are both going to outweigh the lower growth parts of the business. And just to remind everyone, of course, the Oracle Cloud is fueled by the emerging artificial intelligence workloads. He believes that's going to be the key to the database and overall story for this stock moving forward. It's up more than 50% year to date, as we see, and it is on a tear. So Oracle is also reporting their fiscal first quarter earnings on September 11th, and we'll see more of the story then.
Yeah, thank you so much, Renita Young. Great to see you. Appreciate it. All right, a spotlight in the semiconductor space for you. Of course, we're learning more details about the upcoming ARM IPO. Want to find out more about these chip stocks? Joining me right now, Scott Bauer, CEO, Prosper Trading Academy. So it's a $52 billion valuation. We're looking 47 to 51 on the pricing. It's something everybody's been waiting for. Of course, 96% of it still owned by SoftBank. Your thoughts on what's going on with this new IPO coming our way?
Well, it obviously is the highlight of the year, and I think it's really important for the entire, not just the semi market, Nicole, but the entire IPO market to see how well received this is in this higher interest rate environment. You know, this is probably the biggest tech IPO that we've seen during the rate hike environment that we're in.
Let's
So
get nuts!
if this is well received, it could pave the path for other IPOs coming later this year, maybe into 2024. I would expect there to be a lot of hype. There's probably going to be a big push.
Thanks, Bob. I appreciate it,
once
man.
the IPO happened
Blue
in the
face.
stock price here. It's certainly not
Ultimate puts
anything that
vibe.
as an investor I would want
No,
to
I'd rather not.
chase upfront.
I don't want to get,
But if this
I don't
is
get copyright strike.
in this environment, that's a real.
I might join you on those puts though. If we break through VWAP here.
And, you know, when you talk about big tech and all the
Maybe that'll
names
help.
that have
Maybe it won't. I don't know.
of Apple, Google,
Looks like a double top
Nvidia,
potentially if
all
this
showing interest. How
looks like it's
is
pulled
even
back
gonna
maybe
work?
too
I
far for a
mean,
handle.
you know, when we see this demand and
Ultimate
you know,
puts
will it
vibes.
really price at
I'll have to listen to it, though.
$51 maybe.
I'll listen
It
to
might
it.
go even higher if the market's in a good mood.
Well, like you said, you know, the biggest players out there are the Apples, NVIDIAs, Googles, Intel, AMD, amongst others, that not only are they using, you know, the ARM technology, the ARM chips, but they're investing in this as well. And they want to get as big a piece of the pie as they can to make sure that their rivals don't get an edge. This stock, or this company, I should say, ARM, they power 99% of the world's smartphones amongst everything else here. So I think that the big guys that are out there, these big, you know, mega corporate international companies, they want to be in it because they want to have influence down the road in their own product using this technology. So this is going to be huge. And it's not just in the smartphone industry, Nicole, it's also in the video gaming industry as well. And they power every playset that's out there, you know, Xbox, PlayStation, you name it. And now that they're going to have, you know, almost unlimited capital kind of to play with and backstop, I would think that the gaming industry is going to grow by leaps and bounds, and you're going to see new technology and maybe update to some of the current sequels that are out there in the gaming industry much faster than we've seen.
Right, understood. So that being said, I mean, could there be negative plays here too? Do you think something could go the other way?
There certainly could, but I think right now it's more wait and see. And again, I would not chase the IPO. You know, a lot of investors are going to say, "Oh my God, I got to get in."
I grabbed some puts there.
If I can get in it,
We'll see.
whatever it is, this thing is going to be double in a month. I would not do that because we've seen, you know, there's
Barbecue
a
did bounce off
there's
that
a
level
pattern
too.
for that, and we've seen that play out where there can be an immediate
might be
pop,
bounce
and
on the
then we
market
see
right
it
there.
come back a little bit. But the fact
Fake
that
break.
Apple, NVIDIA, you know, and
See.
the like are you know, going to be as big of investors as they can, that certainly gives me a little bit more positivity that this stock, once it comes out, will probably hold its value.
Yeah, and you know, in 2020, SoftBank tried to offload ARM over to Nvidia for $40 billion. You know, and I just think about the group, as you said, I think it'll bring a lot of excitement as a huge tech-related IPO. I mean, how are you feeling about the semiconductor names and tech in general, which has done incredibly well, but does it have more room to run? Is that on a day where, for example, Goldman Sachs, you know, reduces the chances
Let's go
of a
barbecue,
recession?
AMC.
It's actually unbelievable.
What's
As you
AMC
just
doing?
pointed out, the whole
Well,
sector
pump and
has done
dump on AMC
incredibly
this
well.
morning.
When you talk about where we were just about 18 months ago in an environment where, you know, big growth with interest rates at 1%, 2%, big growth stocks were just absolutely killing.
I think barbecue's alright.
The
It's
fact
just
that these
some
stocks
consolidating
are
from
near
its
all-time
rip on Friday.
highs in this interest rate environment, that is really almost dumbfounding, to be quite honest. And I think that's why this is so important, because this may set the benchmark for what we see over the next 6 months, 9 months, year in IPOs with tech stocks. And again, if there is a big appetite for this with this kind of interest rate environment, then that's going to show to me that this rally that we've seen in semis, it's going to continue. Not without maybe some pullbacks here and there.
You need a dink in your life?
Haven't seen the end of it yet.
Got one right here.
Right, understood. Scott, I'm so glad
Right
you're
here
with
for
us
ya.
on what could be, you know, this obviously obviously is going to be monumental because of its size, but I'm excited to see how it pans out, as are you, I'm sure. Okay, until next time, Scott Bauer, Prosper Trading Academy. Thank you so much. Good to see you. Coming up next, the disruptors. We're watching Airbnb. The company's getting added to the S&P 500 on September 18th. And George Zillis will come in some of the details.
Think right on cue. GameStop fading business. Commercial about phone games. Phone games. I mean, yeah, they've moved into some more PC stuff, which helps bring in more revenue. And then, I mean, they've fast shipping has been good for them. A lot of cases you can actually get it quicker than Amazon, and it's not. Yeah, but yeah, it is a tough space for sure. Like, we have to find more sources of revenue. So I think that's kind of where the marketplace comes in. The NFT marketplace, like, I mean, that whole thing could be huge, especially if they're talking kind of a crypto exchange even. I don't know if that would still be under GME or not, but I could still have a place. I just need to trim fat and, you know, push into the markets that they're good in. Collectibles too. They do well in collectibles. So that's not something. I mean, people have digital collectibles with NFTs or whatever, but it's not going to replace real collectibles. I think those will always have a spot. Millennials don't partake in phone games? Really? You think they're too old for them? Crazy to think about. HE. What happened? Down 13.5? How could you? Oh, more lawsuits. Let's see. Hawaii, Maui sued for gross negligence in deadly wildfires by victim's family. Is that really the news that caused this drop, though? Like, we know there's going to be families with lawsuits. Huh. That doesn't seem like a very merited drop. There is a gap down there, though. bounce there on barbecue. Eyes coming down here a little bit. Got our MACD crossed over. We're under the VWAP, under the 9 moving average, under the 50. Guess this could be a support. Little tester. We break the lows. It's choppy. Choppy. What's a game console? Sounds like a plan, Wraith. Or Wrath. Gonna spy back up to VWAP. Good time to have gotten calls there, not puts. Well, we in the chop. We close them. Little loss. Wait for their setup again. If that handles efficient. GME is below VWAP. Liquor's up 22. Barbecue down 11. It's at 23 cents. Nice bounce near that trend. HE still kind of selling off here. There's a gap down there on 13.8. There's a pop on barbecue, only down 8% now, 23.80. Back to VWAP. Take a poll. Millennials, phone games versus console games and PC games. I think phone game still wins out with millennials. I think it's still the most used. And then I'd say console and then computer. I think you have to look at the generation before for that to change. And then it would probably be console, computer, phone. And then the one before that, probably computer, console. That's a lot of generations back. Dink's the age of dirt, so what's most popular with you, Dink? At this point, is it if you were to game, if you do or were to be? I think it'd probably be on your phone, actually. Minutes to noon. Thanks, guys, for your thumbs up. Got 8 on the board. My tardiness is going punished right now. Buy's coming back down. Ah, this chop. Don't do it. Oh my gosh. Alright. I'm chilling. I don't like this chop at all. Chop me in and out of those puts. Yeah, we're coming up on 12. I missed the morning trade. % down on barbecue now. Give me up 2.6. I think it's repeating Thursday.
Forward to Thanksgiving into the winter holidays, you know, that volume will go back up again and hopefully bolster the industry.
Right, understood. You know, when you talked about AI, I thought that was interesting, Lee Bull. You brought that in there. That could be one of the positives for the group. Any other positives or negatives that you want to mention here?
Well, I will say just today, we just saw that oil just hit a new yearly high of 86.81. And as far as the hedging goes, the three majors don't hedge. Southwest does, but now this doesn't look like this oil price is going to decline anytime soon because OPEC just increased, said that they're going to keep the $1 million cut through December now. So that's going to be a little bit of a headwind. As far as the AI goes, though, yeah, giving a little bit of tailwind maybe. When people mention AI in the stocks, you know, they're using both AI and virtual reality to do a little bit better with scheduling and promotions and that type of thing for marketing. So there is that, but we do have, I think, a little bit of a headwind with the oil price now.
Yeah, and look, it's at 87.77 right now as we speak. You have Russia and Saudi Arabia extending those cuts until the end of the year, to your point. Thank you both so very much. Lindsay Roschke and Lee Bull, thank you very much. I mean, I should say that in China you have slower growth and there was some concern about demand, but for right now, today, new oil highs for this year. Thanks for being with me. I'm Nicole Petalides. See you at 2 o'clock.
You could think getting commission.
pegs. Yeah, Nicole's hair is all dark. I don't know what she's doing there. Why is that VWAP doing his VWAP chop? Dang it. The morning trade. I'm over trading middle of the day. GME is down a bit. Up 2.4, 1886. What's that you're talking about, Alfred? What? Liquor, flat round VWAP. XXII has been rallying up today. Thing took a dump. When did we trade this? Mullen, 10%. AMC down 0.5%. We got a little head and shoulders here too on the 5-minute, or it's a cup and handle. That's chop and consolidation.
This month. And like Folio will break down consumer sentiment data on Lowe's, which is down slightly despite an upgrade today. Now, 2.5 hours into the trading day, stocks are mostly lower to kick off the holiday shortened week as a jump in oil prices pressured some sectors within the market.
VWAP there.
Crude prices rose to 9-month highs after Saudi Arabia extended its 1 million barrel per day oil production cuts, along with some news out of Russia that they might do the same. Now let's take a look at the 4 major indices, which, as I mentioned, are all slightly in the red as we kick off this shortened week. S&P 500 down 0.2%. The Dow Industrial is off about 42 points, or 0.1%. The Nasdaq 100 just peeking back into the green, up slightly, and the Russell 2000, the small caps, leading to the downside and by quite a bit, down 1.75% on the session today. To help me break down this market action, let's bring in Kevin Hinks. Kevin, when you look at some of the moves in some of the asset classes, rising dollar, rising yields,
the reporters are like pumped.
Stop right there.
Hey, Lawrence, what's up, man?
You've already
rising stocks.
No, and that really, when you don't have
Pick Up Sticks is a
any
fun
real
one. I
headline
remember playing that
data
one.
to talk about, stay with the fundamentals, which is stay with the macro.
To pick up all the sticks.
You can make
This
the case
is the
that
way.
the 10-year yield is recovering. It had sold
Morning,
off lately,
Jay.
and it's firming up and recovering. But the dollar's a different story. The dollar has chewed through the leash and is running. And so that might be a lot more concerning because that hits commodities more. It
It's
hits
just
grain
consolidating,
markets,
I'd say,
it
after
hits
the
metals,
frothy rally
it hits
on
a lot of
Friday.
things, but not only
Still a nice
and
uptrend. I think
it hits
still
U.S.
looking good.
multinationals. So there's
Only
another
things
thing.
changed.
But the dollar and then crude story. That's going to
You've
start
got, what, like a
showing
week
up
or
in
so
numbers,
until
Tom. I said this morning with
that
Ben
deadline?
Lichtenstein, it's not going to show up in the core data, but it's going to show up
Towards-
in that year-over-year data, which sometimes is that shiny reflective thing in the corner that investors keep paying attention to. So I think it's pretty significant that the macro is working against this market, and it did Friday.
This chop is
It did
disgusting.
Friday too, after a little bit of a little bit of dodging around right after the number. They all went higher, and that was a tough day for stock. This is going to be I'm not saying it can't
Absolutely
rally. This is a
disgusting.
hard day for stocks to rally when those three are working together.
Yeah, we had a good week for equities overall last week, but feeling some pain. And I'm actually surprised that we're not down further.
Yes,
with
because I think this China news is important.
Right.
Them getting into the chip business, the semiconductor business, that should make, remember, because with 85 to 90% market share, what can hurt NVIDIA? Competition.
Right.
The C word.
Yep.
The other C word.
Yes.
Competition could work against NVIDIA like it did for Netflix and streamers a couple. I keep comparing those two because the euphoria about streaming was similar to what it is in AI, right? So I'm watching that's a bigger development than we think.
Well, I did read an article before we came on that one of these analysts was stating that AI is not a bubble just because of the applications across all different types of sectors and different segments within the economy, that it's not a bubble.
We're not saying AI is a bubble. We're saying the stock prices of AI stocks are a bubble. AI could, you're right, could go crazy. It could go for long periods of time. We didn't say AI is the bubble. AI stock valuation. That might be the bubble.
Yeah. One of the stocks that's doing well, speaking of individual names, here is Oracle. Stock's up a couple percent. Let's bring in Caroline Wood, senior markets correspondent here. The stock got an upgrade today. It's had a pretty good year so far, Caroline.
Yes, sticking with your AI conversation, Barclays looking at Oracle as a way to play AI, upgrading shares and sending shares up about 2.2% right now in the early going. Barclays upgraded the IT giant to overweight from equal weight, calling it a multi-year growth story, boosted its price target to $150 a share from $126. So Oracle is currently trading at $123.65. So that implies more than 20% upside from current levels. It's also the highest price target on the street. Should note that Guggenheim and Mizuho also have their price targets at $150 as well. Barclays sees a multi-year opportunity for solid growth at high margins, driven by an ongoing positive mix effect of better software as a service and cloud outweighing the lower growth areas of the business, says OCI. The Oracle cloud infrastructure, partly fueled by emerging AI workloads, will be key to the database and overall story, and also thinks that Oracle benefits from being a close partner with NVIDIA, saying the fact that it was one of the first cloud service providers to NVIDIA's software as a service products makes them more bullish. Added that the continued shift of Oracle's products such as Fusion, NetSuite, and OCI into the cloud, which has helped growth in the past few years, thinks that growth can be maintained, pointing out that those three businesses make up less than 25% of total revenue right now. Just in terms of additional commentary from this Barclays analyst, he says the business may never reach the size of AWS or Azure, but we don't think this is necessary given the smaller size of the overall company compared to these hyperscalers. More important is that OCI is following a similar trajectory of growth as AWS and Azure when the offerings were at a similar scale. So shares up more than 2% today on this news, up more than 50% year to date. And take a look at the one-year chart. Shares up about 65%, only really a little bit more than 3% away from those all-time highs. So good day for Oracle, really good year for Oracle.
Yeah, Caroline, the neat thing about Oracle is they seem to be late getting into cloud and very small percentages. They seem to be late getting into AI, but this company competes, and they compete hard. And their numbers in cloud are growing nicely, and their numbers in AI are probably going to do the same. So they're in all the big important categories of this economy, and they've got small market shares trying to get to bigger market shares. It's a good bet for investors thinking about Oracle.
Yeah, despite all of those points that you just made, Kev, it's interesting because when you look at the breakdown of Wall Street analysts, they skew pretty cautious on this name. I was just kind of doing the math. 45% of analysts have a buy rating, but 55% have a hold rating on this name. So there are more holds than sells. No one has a sell rating, so no one's all out bearish. But the median price target's only 132, so that's less than $10 away from where it's currently trading. So it doesn't necessarily, despite Barclays pointing out that it was a close partner, especially in the early going of NVIDIA, doesn't necessarily seem to have the Wall
I like
Street
that, Kitty Daddy.
that
One man's
like
bubble
NVIDIA
is another
have when
man's
it comes
priced
to
in.
AI.
IP's
Yeah,
dropping
I think
more.
the scale of Oracle also, I think
Not
over
too bad.
95% of the
1.8.
corporation, the S&P 500, use Oracle in some way. So that integration between different products from
AMC
them
is
probably
green,
pretty
0.5%.
seamless integration.
And Larry Ellison, a pretty
Oh, it's kind of moving with GME a little bit.
businessman when
Is
it
that
comes
just
to these
SPY?
things and making moves.
Interesting.
Yeah.
They're both kind of up through
He's done
VWAP.
pretty well. That island that he has in Hawaii, I'd like to visit that sometime. All right, thanks to Caroline Woods, Senior Markets Correspondent here on the network, breaking down the Oracle upgrade. But now let's bring in Nick Dideracos, Financial Risk Management Director at TD Ameritrade. Hey, Nick, I wanted to get your take here. Oil at basically $88 a barrel here. It's putting some pressure on the airlines and some other sectors within the market. You're seeing small caps taking a real big hit today also. What's your take here on rising crude and basically the manipulation of Saudi Arabia and OPEC Plus potentially, trying to get oil prices higher?
Yeah, I guess maybe mesh that up, guys, with the story on Airbnb coming into the S&P 500, right? Travel in sort of the leisure sector is still really, really strong, right? People are out there engaging with services, right? And not as much hard goods. So this definitely takes a bite out of our ability to go and travel, and certainly it's going to be felt in pocketbooks around the globe. But as the Fed closely watches inflation, they don't want to see energy prices ticking back up. So in the face of that, so I think that's maybe a little bit of why you're seeing a down, kind of broad, flat to down market today. I think it's interesting though. So this is clearly an OPEC-driven, comment we saw what Saudi Arabia did, in extending these cuts. So they're going to continue to hopefully drive up, drive down supply, pushing the price up. But what ultimately is interesting to me is kind of conflating that with what's happening in China. The fact that they're not just dumping money into the economy, they're very cautious about keeping inflation low there. And the arguments are, it could be a sort of a 3% Chinese growth rate, not the 5 to 8% that we've been used to. So if China's really growing that slowly, you wonder, if that's not the 800-pound gorilla in the room that's sort of going to ultimately drive this in the longer run. So I think it could be a little bit short-lived in terms of this OPEC news if we continue to see weakness out of China, because it's just such a larger influence than probably is this OPEC news. But
yeah,
time will tell.
Yeah, and you almost have to wonder, is that the reason that they're extending these production cuts, a million barrels a day, into the end of December here, Kevin, and the inflationary pressures that it's going to have. One item of note, we talk about the Atlanta Fed GDP now, right?
Yeah.
And they said that the consumer's still out there spending 5.6%. It's tracking right now for Q3 that they came out with last week. St. Louis Fed just came out with some numbers, minus 0.07% for Q3. The divergence there is pretty wide. I mean, if you look at what's going on in the economy, we're probably saying 5.6% is a little bit, out of the realm of possibility at this point. Most estimates are around 1.5 to 2.5%. But then you see the St. Louis Fed coming out and saying, hey, those growth numbers just don't make sense.
And those two opinions make a market, Tom.
Yeah,
right?
That's
exactly right. That's why if everyone thought the same thing, that'd be different. But listen, this crude oil, what this is doing, and remember, geopolitics, enter into crude oil a lot. OPEC Plus, you know what? Remember OPEC Plus is? It's OPEC and it's Russia.
Yeah.
So Russia's now multi months into a war that they thought was going to take a weekend, right? And now it's lingering, and that's probably getting quite expensive. Now, the thing about higher crude oil prices is it favors the energy sector. The energy sector's up in the S&P up 1.5% today. But name another sector that it favors. The answer is really none.
Right.
It makes life expensive for everyone else. So favors energy, hurts a lot of other sectors of the U.S. economy. Travel, that you just mentioned, being one of them. All their expenses going up.
And trickling down to the consumer eventually. And that goes into, basically our theme or thought process that, hey, inflation might just stall out going down. That trend that we've seen going down since June of 2022, that might come to an end moving forward with crude oil prices back up because it makes everything more expensive. But Nick, Goldman Sachs, Jan Hatzius came out today and he said the risks for basically a recession went down from, they had a 20% risk, now down to 15. So they're pretty confident in the expectations for the economy at this point and what investors are doing.
Yeah, and they're more mid-market guys. I mean, if we could make a GDP market of a dime under at $5, we could all go back to being market makers again with those types of drive a truck through markets. But I think they fall in the middle. They're like the 2% range. If we were to see negative growth this quarter, right? If we really were to see that, I think you could then make the argument that if it's a weak holiday season, you could see 2 quarters of negative growth in a row, and you'd call that a recession, right? Technically, but even if that were to happen, right? I think that's kind of what they're telling us is it's going to be shallow. So they're not saying it's not going to happen. 15% is obviously pretty low chance, but you read on and what they put out, and even if their belief is that even if there is a real slowdown and there is a recession, that it's going to be mild. And to me, that's the more important piece, right? You get a technical recession of 0 to slightly down GDP, inflation adjusted. Okay, fine, but they're not seeing sort of the tank scenario as the base case here, which I think is a positive thing because. And you kind of feel that out, right? You see what's happening with the unemployment rate. You see what's happening with employers around the globe. Really, there's been pointed layoffs. There's been jobs have been a little bit harder to come by, but you haven't seen this mass layoff, which is good, right? I think if that's easing and the Fed's stabilizing and not just shooting rates to the moon, 75 basis points at a time, I think we can stay that course. The question is, to me, then, okay, that's all known right now. What takes it off course, right? Is it China? Is it, oil getting over 95, oil back to $100, and everybody's going to start talking about it a little differently? What are the potential derailers of that come in the form of inflation and higher costs that would take their estimates back up? If China's economy really does slow, they're not exporting, we're having to pay more for those goods coming out of there, that could be an issue. So there's definitely some bumps in the road. It's not a 0% that they're putting out there, but it is nice to see that they think that the higher labor force participation, the slightly higher unemployment rate, they're all kind of meshed together in a way that makes it feel like the soft landing / very shallow recession is now the base case. And I think that's why you're seeing markets, sideways here, not tanking on sort of the other global news that we've seen.
Yeah, soft landing. I think that was the point Nick's getting to is that we can navigate this, Kevin, with everything that's going on. The headwinds that might be out there, the rising. We haven't even mentioned the dollar or crude oil. So there's lots of things out there.
Crude oil story is big, though. Think about this, Tom. From $70 to 87.5 is about almost exactly 25% higher. So if you paid $40 to fill up your tank, now you're paying $50. Right? That cuts into spending where you can spend on other things, discretionary spending. So it's not insignificant that this is happening.
Student loan repayments starting again also October 1st. And when you look at data this week, earnings this week, it's kind of a nothing week, right?
Thin and thinner.
Anything that sticks out to you that could potentially move markets here, Kev?
Kroger on Friday will be a good one to look at. I think Zscaler today is one to look at. Besides that, no, nothing. I mean, RH, no.
A lot of Fed speak.
Yeah.
There's just not, Fed speak, why? Because you're getting close to the quiet period here in another week.
A lot of Fed speak picks up on Thursday and Friday. All right, guys, let's take a quick break here. When we come back, we're going to talk more about Zscaler ahead of their earnings. The cybersecurity company is up over 40% so far this year. Will it be a Palo Alto or will it be a Fortinet going into this earnings result? Because we've had some divergence in a lot of those results. Fast Markets coming right back.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Welcome back to Fast Market here on the Schwab Network. We're talking more earnings. Zscaler reports after the close. As I mentioned, shares are up about 43% so far this year. Kev, in the cybersecurity space, it's had a good run here so far in 2023, but I mean, it did hit 52-week lows earlier, about 4 months ago. But give me your take here on Zscaler. Software as a service type of cybersecurity company, but their platform is pretty popular.
The Z stands for Zero Trust. Is the way their business model, which means everyone has to verify. The CEO of their company has to verify. It's the Zero Trust business model, which is working. You know, it's much more popular if you think about AI and everything going there. But Tom, they have 600 customers, 6,000 customers. 30% of the Fortune 500 uses Zscaler. This is a company that has big plans to expand. The only real problem you can mention is valuations. But Tom, how about this? Insiders are still buying the stock at a 3-to-1 clip to selling. So where other firms that's about 1-to-1, you know, with buyers and sellers, they have 3-to-1 still buying.
Right.
So that tells you something about valuation and their trust in the company.
Yeah, some of the world's largest companies, government agencies. Nick, we always talk about cybersecurity firms. It's like one of those necessary expenses that a lot of companies don't like to give up, but we've seen some mixed earnings in this space recently between CrowdStrike, between Palo Alto, between Fortinet, which got hammered after their last earnings report. What's your take here on Zscaler?
Yeah, I mean, you know, they had a revenue miss last quarter. Growth is strong. Like to Kev's point, I mean, there's so much upside here in terms of taking market share because they've only got a couple thousand clients total. You know, and these contracts are big. They're big government contracts. And it's an area where nobody can cut, right? You want to cut your marketing budget, or you want to cut your, you know, your infrastructure budget in other ways, fine. But nobody's cutting really the cloud security space because it's all that much more important. And as more companies push to cloud, you need more cloud security. So it's a little bit of a necessary, a necessary evil right now, which is, that's fine. The question to me is really, share of the pie at this point. There's not a ton of pie growth right now, right, in any of these areas. NVIDIA is sort of the one that's chipping out their own sector there. I guess no pun intended. Right? They're really growing it and selling their chips to so many other entities like governments now. This isn't really happening in the cloud space, in the current state. And as companies tighten their belts a bit for this sort of cost cutting period, I think that will be the real question. Have they been able to grow the pie? Have they been able to take share from competitors? They've had an interesting move leading up to this, and you'll see my thought on this going into the example trade here. But they're up like 10% since August 30th. So there's been a rally into this. To Kev's point, insiders are buying. So is that a tell of good earnings, or are we going to keep hitting this 160 resistance level that we've seen on the chart now for quite a while? So it's an interesting setup here going into earnings because there's been a pretty big rally going into the number. And I think, potentially indicative of insider buying, like you're saying, but, is that going to stall out? Is it going to ultimately be a sell the news type event, or is it, is the buy up into this, indicative of them really growing that pie and ultimately beating revenues?
Yeah, revenue estimates, $430 million. That's about 35% gain from year-over-year levels. EPS at 49 cents. But implied volatility elevated into this one. You mentioned that resistance level. In August 1st, it traded about 162.80, and it hasn't traded above that level since about 11 months before that. So that resistance level comes into play when you just look at it on a chart. It's getting close to those levels now, just about 160. So how do you want to look at this from an example trade here, Nick?
Yeah, and it's been, like I said, a pretty decent rally. You just look back to the middle of last week, and it's come about 10% from there. So just looking for a little bit of a fade back from those levels, guys, but giving yourself some room still. So when I sent this trade over, markets move, it's selling this week, so a couple of days out, 3 days out, the 170, 175 call spread, expiring Friday. I sent it over at 135. It's already up to about $1.42 right now. So, this is one where you have a little bit of time on the day. Earnings are after the close, so you can kind of watch this, work a limit order if you're interested in this type of trade. I mentioned 160 as resistance. You've seen it bump up against there. It's gone through a couple of times, but hasn't been able to hold there. Selling the 170s for $1.35-ish credit gives you some space above that. So even if it does pop, that's okay. You're really not at a max loss until you get above that 175 level. So you get a little bit of room to the upside. So it is neutral, to bearish, and again, not overly bearish, right? You're just looking for essentially no more than the expected move to the upside, about a $14 price range, or a $14 market maker move priced in for the earnings right now. Anything to the downside is fine. Neutral all the way, lower, no risk to the downside. $5 wide spread. So if you get it for $1.35, you have the opposite of that in the risk there. But taking a little bit of a technical look at it, guys, and thinking it could continue to bounce off of that 160 level.
Yep. Let's break this one down. This example trade, September 8th weekly series, expires in 3 days in this holiday shortened week. Selling the 170 call, buying the 175 call. $1.35 credit, that's what you can make on this one. Your risk, $365 per spread. But Kev, as Nick mentioned, the option market's pricing in nearly a $14 move either way, about 8.5%, 9% in this one. And you're giving yourself that cushion to the upside. It's not one full standard deviation, but that break even of 170, 135.
Yeah, Nick's short strike is actually inside the standard deviation. What's the trade-off? You collect more premium on this, right? There's a reason he's collecting north of $1.40 right now in premium. But look at this, Tom. Look at the chart. For our viewers, check out the chart on Zscaler. The last 3 earnings, in the next week, this stock has moved each time on the earnings event. Sometimes on the day of the event, but look at the corresponding moves each time over the next week. They're not small. So this one has a chance to move. But the good news is, if it's lower, you've got a nice premium that you're collecting. And if it doesn't move, like, this is one of those things. 3 of the 4 outcomes turn out positively. The big move to the upside is what is the risk here.
Yeah, you mentioned that the float on this one, about 145 million shares outstanding. That's about half of Palo Alto, right? A little less than half than CrowdStrike.
Not big.
So yeah, definitely. If you look at this, it does have that potential to move, and not only the day of. This is a short-term example, an earnings type play, but also over the next maybe week or two.
If you look at 5, 7 days out, there's solid moves in this name.
All right, so good look at that example trade there, neutral to bearish on that selling a call vertical, with the expectations that maybe this resistance level that's been in place for the last couple months remains. All right, thanks to Nick Theodorakis, Financial Risk Management Director at Schwab. But coming up after break, Kevin and I are going to be joined by Andy Swan from Likefolio for discussion on Lowe's and the data on the stock moves. The home improvement retailer was upgraded this morning, is just below 52-week highs from late July. Stick around, we're coming right back.
I moved up a little bit, coming back down here, still just chopping around. Middle of the day chop. That's what you're gonna get. Barbecue 2280 down 11.9. GameStop's holding up around VWAP, 3.5%. AMC is actually a little more bullish today, up 1.3. There's a gap up there, of course, lots of gaps. SPY moving down to VWAP. What kind of afternoon trade we can set up on the SPY? Maybe something formulates. like the Schwab radio better.
Renovation mentions are up 12% on a year-over-year basis, and I really think that when we dug into this, a lot of this is just simply the fact that people realize that they're stuck in the homes that they have right now because they aren't going to move
17% on Mullen now.
and take on a high interest
Still
rate
way
in
down.
a new home. So instead of, you know, that type of expense,
Yeah, Twitter's
they're
been
going to
private
go ahead
for
and
like,
bite the bullet and
I don't know,
improve
3 months, 4
what
months.
they're living in now. And so I think that's a potential boon for Lowe's moving forward. The other great thing that I see happening for Lowe's that we don't see happening for Wayfair or Home Depot is that Lowe's is really making its customers happier and happier every time they walk into the store. You know, we used to really watch this battle between Lowe's and Home Depot from a consumer happiness perspective. It used to be really tight. Home Depot used to be in the lead for the most part, but now Lowe's has taken a decided advantage there. And what that tells us, and it's a consistent, you know, 2 to 5 points better than Home Depot. And what that tells us is that while things are a little bit tough, Lowe's is doing a better job of creating a great customer experience, which we think once things do loosen back up, rates start to fall, homes start to move, and these home improvement projects start to kick in, that Lowe's will be the beneficiary of those repeat customers that they earned while times were tough.
You know, Andy, when we look at these two companies, and we cover them a lot on this show, we've always pointed out Home Depot as kind of the leader in this group, right? In that relationship.
moving up there,
but the numbers don't always say that. I mean, if you look, Lowe's in the last 5 years is up 115%. Home Depot's up 64%. They're buying back
still
more of their
consolidating
stock, more percentage
right around
than
that
Home
resistance
Depot is.
line.
And Andy, the myth
To be
that
potentially breaking it with this bull flag it's setting up.
maintaining your home is as high as
so
in Lowe's or goes away is just a myth. You
weird on the daily
never
though, it
stop
shows it's below
working
it.
on your home. It's recession proof. It's consistent. So that part is
Yeah,
never
it's just on
going
like the
away.
hour and
But
shorter shows it's above it.
You know, Lowe's with Marvin Ellison, a Home Depot alumni, now as their CEO. This is a real competition more than it's ever been, Andy.
Yeah, it absolutely is. And I think, you know, Home Depot does a fantastic job with its contractor business.
Missing
I don't
the
think that's in
ADL,
trouble. I think
the mall?
they service
No, I'm not missing
contractors
that.
really, really well, and Lowe's has a long way to go to catch up to that. But from a consumer perspective, from the one-off, you know, Kevin or Andy or walking into the store and trying to figure out what to get to make this kitchen a little better or to fix this sink, Lowe's is doing a better job with all of those customers.
Lowe's probably has better customer service though than Home
You
Depot.
know, especially as we get into,
I usually,
you know, we got to go out.
I frequent Lowe's or Home Depot more.
But if we get into another housing or home renovation boom,
And
then I think Lowe's could
ones I go to
really
have pretty awful.
accelerate its lead over Home Depot in terms of
People that
taking some of that
I know more
market
about,
share.
you know,
They're
department
always
that
gonna
I don't
be
know
the
anything
two that
about.
battle it out for as long as I can see, but it's
I
good
somehow
to
know
see
more than
some
they do.
serious competition heating up, and for there to be a
No, I'm not aware of it,
new leader of the pack.
Lord, so I'm not missing
yeah,
it.
And Andy, you know,
Beautiful
I was
thing about not
surprised
knowing
at some of
about
your
something.
data, especially the ones
You don't miss
the
things you
happiness
don't know.
levels compared to Home Depot. Has that been flip-flopping slowly for you guys at Folio as far as your data goes? Because it always seemed like that Home Depot was the leader in this space. It was the one, you know, it was the top
22. Look at
dog
RSI
out of this
divergence on
duopoly.
22.
Yeah, I think
XXII.
if you'd asked me a few years ago, or let's say pre-COVID, if you'd asked me, you know, will Lowe's ever be, you know, the preferred consistent winner in terms of consumer experience over Home Depot, I would have said probably not. It's pretty consistent that Home Depot just wins this. They're always close, but used to be Home Depot 2 to 5 points ahead. Now it's Lowe's 2 to 5 points ahead. And I think that's a really big switch when you have kind of that duopoly, those two competing forces.
I feel like the Lowe's I have been to, I've had a little better customer service. Maybe just because they're not as busy, get better service
or something like that. So
but
one wins the customer.
I think they're usually a little more
one loses.
expensive.
And right now we're seeing that shift towards Lowe's winning more of those decisions than Home Depot.
Yeah, and as far as the pro business, Lowe's has been digging into the
they're not winning,
leadership.
but they're chipping away.
Chipping away.
And how about this, Tom? Here's a stat that I wanted to show Andy. In the last 5 years, Lowe's has bought back 26% of their outstanding shares. Home Depot, 12%. I mean, that is a massive number of shares they've bought back.
Right. Yeah, rewarding shareholders too with dividend increases also and buybacks. All right. Great stuff as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at Likefolio, breaking down the data for us.
I've heard about some of that. That was a while ago, though.
Point,
that backup.
I've got a relatively
back up in the
new
media.
house, and my better half's already like walking around going, "Yeah, we need to do this just this weekend." I was like, "Whoa, whoa, whoa!"
It's an obsession. I walk around every time the kids bump a wall at my house. I'm like, that's going to have to be repainted.
Really, there's not enough news where they're
and you walk into
talking
these
about
places,
Elon
Home
again.
Depot or Lowe's, pick your one, and you go, help
Need
me.
another war or something.
Where can I find, and you're like, rather than walk through the store, just help me find
Too
this,
bad
will you?
Trump's
It's
not president, so you
it always
can't.
needs to be fixed, right?
Recession proof.
Yes. All right, Kev.
Have news about him
looking
all
at
the
this
time.
from an example trade perspective, as I mentioned, up about 15% so far this year, almost at 52-week highs coming up.
The assumption you have to make here is that you're bullish in this name, right? That's the assumption first start out. Then, Tom, the reason I chose the trade, the strategy I did, look at the implied volatility in Lowe's. Look at the historical on the options stats page, 5%.
Yeah, wasn't there something prior though about that with Elon?
Further out in duration on my long side of my diagonal because it gives me long vega, and any recovery in that implied volatility will be a windfall to this trade.
Busy of a schedule to really care, keep up with it.
October 20th. So gave myself more vega on this trade. I bought the 230 call just right at the money, and then I sold the 235 call in next weekend, September 15th. So that's cost about $6.50. Now, the
thing is, this buy just gives you these triggers to go.
Why am I spending $6.50 for a
But then
$5 spread? Because
you
you've
in the
got
chop.
duration on your side, and you've
Then
got
we suck
vega
again.
on your side. That's why you would extend that out. If you want a smaller debit on this, move that October 20th date up towards closer to expiration, and that'll drop down. But you're losing the benefit of any recovery in implied volatility.
Yep. Yeah, let's break down this example trade. If your assumption is that it's going to grind higher, and I like the fact that the way that you set up the strikes is for it to grind higher.
Yes.
You don't want it to explode because it's got two break evens on this one. It's a $5 wide call diagonal here, buying the October 20th, the monthlies, the 230 strike call, selling the September 15th monthly options that expire in 10 days, the 235 call, paying roughly about a $6.35 debit. There's your risk, $635 per spread. But you can see there from the risk profile, you got a break even around just above a 230 on the downside and about 249 on the upside. So you'd need a massive move over the next 45 days to get above that particular level. Now, your short options expire in 10 days. You've got some assignment risk on those, but the idea of this type of strategy is Kevin's taking advantage of that lower implied volatility because, as he mentioned, it's at or near 52-week lows as far as implied volatility. So you're buying that October option a little bit cheaper with the expectation it's going to grind up towards 235. Now, as I mentioned, you got that break even above also because you're paying more than the width of the diagonal.
And there's the cautionary tale on this trade. If it gets towards 235 or close, in that range, prepare to defend this and make a move. Either close the trade because you'll be profitable with almost 30 deltas, but you may have to, extend the call up and maybe extend the lower call up, so you don't get into that losing area where it goes towards $5 instead of higher.
All right. If the market's open, liquidity is provided, you do have that ability to roll that short option. And as I mentioned, you've got some assignment risk on that short option going into expiration over the next 10 days. But a good look at call diagonal here for grind higher in Lowe's. All right, let's take a quick break. When we come back, we're going to take a look at Airbnb. The global platform for stays is rallying on the back of news. It's getting added to the S&P 500 on the 18th of this month. And we've got some other news on Airbnb, which is also causing it to rally here a little bit. Fast Market's coming right back after this short break.
Well, ROFL copters. Landlords. You are up on the media. Up on the tabloids. Sounds very exciting. Never heard of ROFL copters. Ah, yesterday's drama. Well, remember GME earnings. Probably should stream that. Anna. Another top here. Got 10 days on my puts. Like a crash. Teladoc bounced off that support, up 0.5%. Guys down 1%. Oh, my puts are down 40. Yeah, been sideways. Great. They have almost half a year of time. I got them on a bad day, but still. Oh, and there were earnings. Wait, earnings is tomorrow? Oh, okay. Let's see, what's Dish doing? Dish, first little green candle in a while. Still respecting that $6. Not respecting my calls though. Bunko down 2.5. Guess it'll bounce still out of the bottom depths. And Jones earnings didn't go very well. Up 2%. Kind of building a head and shoulders there. Fortunately. All of these options. Rivian up 0.5%. And Tesla 4.5%. HSDT 56. Dink, do you have a position in this one? From when, I don't know, when did we trade this one? I can't remember. Back here? Back here somewhere in this range. Nice volume on liquor today too.
A bunch of different sectors. Kevin mentioned it earlier in the show. You know, airlines are down on the back of this also, and this is definitely a crimp for economic growth, right?
Yeah, not what the inflation hawks were looking for, and it does seem like higher crude prices could slow down some of those growth expectations. Tom, today the WTI, the futures contract to 88.07 and currently trading right around 87.50, so quite the run up. And it's not just today, right? This has been going on for a few weeks now. We've been seeing this strength off the $77 level with cuts, inventory draws, large draws. And I'm also just reminded of the comments from the Saudi energy minister who was back in May. He talked about, again, pain for the shorts ultimately, and they have been feeling that since May when crude was down around 72, recently again bottoming out, retesting the 50-day moving average around 77, now back to 9-month highs, breaking out, and the bulls have their sights set on 93.95. This comes with a strong dollar. dollar today as well, Tom, up to 104.85, significantly higher. Currently pulling back here down to 104.69, but watching some weakness in some of the other foreign currencies like the yen. RBA left rates unchanged this morning. Keep an eye out for the Bank of Canada tomorrow morning.
Yeah, crude oil was at the end of June was trading about $66, $67. So this is a pretty significant jump here in crude oil. All right, thanks to Ben Lichtenstein, host of the Future Show here on the network. But now let's bring in George Tillis, senior markets correspondent here on the network. George, we're talking Airbnb. I wanted to pick this one out because it's rallying on the back of getting added to the S&P 500. But there's some other news out there. New York City started their ban on rentals under 30 days. I don't know what type of impact that's going to have on the overall company, but revenue's growing, but slowing at a growth pace that they've never seen before. It's not growing as much as it was before, George.
Yeah, you're right. If you look at top line sales for Airbnb, it's decelerating. They're somewhere in the high teens area in terms of top line sales growth, at least in the last 4 quarters. But if you look at the earnings profile for Airbnb, it's actually improving quite significantly. Now, I think the S&P addition, or Airbnb's addition to the S&P 500 is going to be very constructive for the stock, because institutions or fund managers who mimic the S&P 500 are basically forced to buy the stock over time. So we could certainly see the price action continue despite the nice move about 8% to the upside today. There is a few hangups. There always has been for Airbnb and even companies like Uber, which are really disruptive technology companies that are disrupting the traditional rental markets. I think if you look at the New York City issues that they're looking to, of course, ban, rentals that are less than 30 days. I think this is going to be more of a case-by-case situation where certain buildings have certain covenants which restrict the ability to rent owner non-occupied establishments. So there's a lot of legal back and forth associated with what's going on with New York City. But at the end of the day, you have to look at the profitability of the business. It's extremely profitable. Profitability has been growing. Looking at last quarter, net income is actually high, is around 26% of total sales. And last quarter, when they reported on the 3rd of August, they actually demonstrated 70% earnings growth year over year. I think if you look at the balance sheet as well for Airbnb, with gross margins that are close to 80%, net income margins at 26%, they have $10 billion in cash, about $85 billion in market cap. So well-positioned balance sheet, growing business. It's becoming the de facto go-to place for online accommodations, and it's a very asset-light business. They, of course, generate fees from both the hosts and guests. One of the things I had noticed when I did my research is they actually, of course, get fees from both of these participants in this supply and demand model that they have, where the total transaction fees they generate are close to 15% on average, and that's quite large. So the take rate for Airbnb is quite high. I think that speaks to the popularity and, of course, the close to 7 million properties on their platform.
George, you just touched on one of the key reasons why this stock's so attractive, and that is the asset-light model, right? How about this? Yep. 43% of their sales turn into free cash flow, George. You mentioned the free cash flow numbers, $900 million last quarter, $4 billion in the last year, $10 billion, I believe, total. I didn't see that number, but they've gone up by $4 billion in the last year. George, here's the other good things. More monthly bookers for places, and the average booking now is going up by 1 or 2 more days as people are making their trips a little bit longer than before, George. But you're right. I mean, valuation is an issue, right? It's getting up there with some lofty companies in terms of valuation where it is. But George, this company with this asset-light model, they really don't own any of these properties. Man, it looks like they have a runway, George.
Well, I think they do. I mean, the thing about it is you have to consider the business as a technology company. It's a very efficiently run business. It's very profitable. I think at the end of the day, the free cash flow is immensely important, especially for growth companies right now. And this is basically a growth company. You could also make the case that perhaps it's growing at a reasonable price. I mean, if you look at the trailing multiple, it's around 50 times. But based on the estimates for the next 4 quarters in terms of earnings growth, it's around 36%. Just keep in mind that last quarter was a very, very good quarter at 70%, but their guidance is about half of what they earned in terms of earnings growth for the remaining for the forward 4 quarters, forgive me, at 36%, but the forward multiple is only around 33 times earnings. So if you look at it from a PEG ratio or PE ratio to growth rate, it's actually less than 1. So that's a very favorable measure from a valuation standpoint for this company. And again, there are going to be some challenges. I think the New York City concerns because of the unaffordability of housing is a really big concern, but you can't really just pinpoint on Airbnb. It's more of a demographic issue. It's more of a widespread economic issue versus just a company-specific issue that Airbnb is causing.
George, real quick here, is one of the headwinds also the fact that we've got a rising interest rate environment at this point, 7.3, 7.4%, mortgage rates, where it might cap that, because it seems like a lot of their growth or their expected growth moving forward is to have more people renting out their places. But if the housing market's as tight as it is and interest rates rising, is that causing a headwind for Airbnb and some of those growth numbers?
Yeah, I think it can. I think at the end of the day, there was essentially a free ride that a lot of Airbnb hosts took advantage of when interest rates were extremely low. I think the rate of change in terms of sales growth, because of the fact that there may be fewer listed properties on the platform over time, based on the historical growth rate, that's been decelerating. But at the same time, if earnings growth can start to outpace revenue growth, that's really what you want to see. So I think at the end of the day, I agree. There's going to be some challenges in terms of the growth rate and the number of active listings because of financing concerns. And again, but at the same time, if they can grow their profits, profit growth to offset that doesn't necessarily mean that the stock will go down. In fact, it could go higher.
All right, great rundown here for us, George, on Airbnb. Appreciate it. That's George Tillis, senior markets correspondent, breaking down the news for us. So, Kev, I looked at this. They're supposed to go into the S&P 500 on the 18th, so that's going to be a key day. As George mentioned, a lot of funds that might mimic the S&P 500 or want to follow it might have to purchase shares. That's why you're seeing the 8.2% move higher in the shares. So I looked at it from that perspective, where maybe it grinds higher into getting into the S&P 500. So I kind of flip-flop what Nick was talking about, where there was some resistance in Zscaler. I looked at a different type of spread. It's still a vertical, but I'm taking advantage of a cushion to the downside in a neutral to bullish vertical, as opposed to a neutral to bearish, which Nick had in Zscaler. So went out to that September 22nd weekly cycle. So it's about 2.5 weeks till expiration. You'll capture when it goes into the S&P 500, and just selling a put vertical. And I looked at selling the 140 strike put, just out of the money to the downside, and then buying the 137 strike put. So a short, neutral to bullish, $3 wide put vertical, collecting roughly about $1 credit on this one. If you can collect $1 credit, you got $200 in risk here, Kev, with a break even down at 139 even on that. So you're giving yourself that cushion to the downside while capturing it moving into the S&P 500. Give me your take here, Kevin, on the short put vertical.
Yeah, there's a bullish tint to the news in Airbnb right now. There's a bullish tint to this spread. The premium is it's a low volatility environment you're in, so right. you're giving up a little bit of that heightened implied volatility, but you're bringing in almost a third of the width of the strikes, and it's you were a little more aggressive with your short strike, but you've got news allowing you to be.
Right, that short 140 put that you sell, about 63% probability that it's going to be out of the money at expiration on that one. And that 139 strike, the break even, about 66.5% that break even's out of the money at expiration. It's really short-term positioning on this example trade here. Also, you've got some assignment risk on that short option going into expiration over the next 17 days also, so keep that in mind. All right, Kev, that's going to wrap it up for you and I today here on Fast Market. But stick around right here on the Schwab Network. Next Gen Investing's coming up.
Ashton Fopega. Yeah, SPY just still chomping around. Coming up on 1 o'clock. slow, choppy day after the long weekend. And right on that trend line. I think we'll get a move by end of day. Barbecue down 11%, 22.99. I may be coming back to VWAP here. GME above VWAP, 1910, up 3.7. AMC 3.6. Back to VWAP. Base is flat on the day, $3.57. Philadoc up 0.3, 22.95. Good bounce there. Hawaiian's down 14.8 now. 12.8. And runs down 2.5. There's 5 VWAP. See if we get a little head and shoulders here again. Needs to break. MACD's flipping bearish. A shoulder ahead. If we retest this low or if we break that neckline. Seems even thank Polte. What's Polte have to do with AMC? Who's defending him? Oh, on Twitter? That's nice of him. Oh, we're at VWAP. It's 1 o'clock. Back on the puts, gang. SPY starting to break some levels there. It's below VWAP. Got what, 498.87 for that low, and then 449.18. Sorry, 449.87, 449.18, 449 even. Wants to make the trek, the extended hours low, and below that. Got some support at 446.27. Dance it around a bit. Dancy. SPY coming down some more.
Sectors, I guess you could say, or subsectors, in this case media and entertainment, that they've been able to not only survive, but in many ways thrive. I know it's not been the last 18
back?
months
No,
that
still
investors
no
have avoided
Gen
for Disney. But if you
Probably
look back
went on
over
a
the last
cruise
few
and
years, this
realized
is
she
sort of what
loved it and
Disney is.
decided to
Disney is
just
a more
live on the
sideways-like
cruise.
stock, not a more vertical-like stock, to kind of borrow terms from
Like those
our
people that
colleague
do.
Ben Lichtenstein. This is a name that is much more of a blue chip, not a growth
Maybe
story.
if
I know
the
Disney Plus got us
Happy
excited.
Yacht doesn't come around,
They're just kind of reselling the same stuff that we were
not
already
that successful.
buying. We're just buying it in a new way. So
Just have
I
to
look
live
at
on a
Disney,
cruise and
I hear
trade
everything
from
that
there.
this analyst is saying. I think it makes a ton of sense. A stock that's been down on its luck, but at some point is there a floor in this price? I don't know where that is, or if there is one, but a question I think investors are certainly asking themselves.
A much bigger
Next,
yacht.
Earnings previews, though, Renita. Let's start with
I'd
the
have to
next
share it with a
favorite, at least
lot
it
of
was at
people.
one point. That's GameStop.
Yes.
The name that is,
GME still around
alongside
VWAP here.
AMC, I think, carrying
Mullen.
its back.
Almost
Also, a
15%
name
up
that's been
on
a
it.
little bit more down on its luck as of late, but all things
It's
considered,
massive
a
sell-off.
little bit more stable than I
Ooh,
think
big
many
bounce
investors
there.
give it credit for.
It is more stable, and that's why analysts are
9.8%.
expecting the narrow
This thing has such a wide range, it's crazy.
to come in when the company reports earnings.
like
They're looking at a loss of 15 cents. That would be
Nice
far
for
better
the
than
Theta
loss
farm,
that
but
it posted
it being such a
last year
cheap
around
price
the
makes it
same
kind of
time.
difficult.
They're coming out tomorrow, by the
And the
way.
lack of liquidity
shares,
with those cheap
they
of
are
options.
more than 3% year to date.
If they did like a reverse
Severely
split,
underperforming
that would
the
actually be really
but
nice.
they're not below. They're not in
Like
the
a
red, they're
5
not
or
in the
10 to 1.
negative.
Bump the
Yeah, and I
price
think
up
when
for the
you
options.
really start to unpack that, this is a name that we associate with volatility now. To have its
I guess Airbnb had
performance
good earnings.
for a long stretch of time be in the single-digit percentage point range is
That's what they're going on about the
remarkable. And I
news.
see that as a sign of maybe
Postmarket,
the,
GME
the
tomorrow.
worst
We'll
of the
be streaming it
volatility
live
associated
right
with GameStop
here.
Maybe was what was driving attention to it.
There's the
Possibly
SPY
here.
coming
Now, we've
down.
been, caught off
Thanks
guard
guys for your
before,
likes
so
today.
I
Sorry I was
will
late.
never say
Hope you had a
that
good,
it
nice
can't
long
happen
weekend.
again, but you look at sort
15
of those
likes on
pops
there.
around short squeezes,
Seems
be
like
it
some
at
of you guys are still
GameStop,
vacationing.
to Bed Bath & Beyond, to AMC. They seemingly got smaller
Yeah,
and
but I'm
smaller
not-
each
actually not
time
listening.
as it was no longer this never before seen or no longer a it's been a long time since we've seen situation. And so you're less caught off guard. You're not going to be as off sides if you're one of those positions that it's on the short side or whatever, other factors come into it. I look at this as one that will garner attention.
Okay.
But at some point, the fundamentals got to back up these valuations. And we know in the case of AMC, that's led to a deteriorating stock price. Does it do the same for GameStop, or can they improve on their marks? Analysts, not so keen to really participate and have ratings on this one. Saw only 2 ratings. One was in the hold camp, one in the sell. So not a ton of action from the street when it comes to GameStop. Maybe rightfully so, given the disconnect between the finance side and the stock price action. But last one here on our list is Dave & Buster's. So sort of a hybrid, kind of company, obviously tied to the restaurant space, tied to bars and
Closing
entertainment, but
the
also has
put
that
here.
arcade element, place you'd go with
Taking
the
more
family,
profits.
perhaps. Not a place I've spent a lot of time at in my life, but certainly one that has been fun to watch from a trading standpoint.
Sorry, I didn't mean to be talking over them. I'm talking about
little bit of
GME.
weakness here
I wasn't
today,
even listening, so
heading into earnings as well. But all things
you kind of heard what they were
considered,
saying,
this
I
seems to be
think.
a stock that's been sort of stuck in its own tracks for most of the year.
That's a good way to put it, because this is why the company decided to make all these improvements to Dave & Buster's. They're looking at creating better photo op experiences for people who want to do it for the gram, right? So they do that. They have renovated a lot of their spaces to include more photo areas, right? But they've also improved their menu. They wanted to create a better opportunity for people to come in with different options, even redesigning their entire areas, their Dave & Buster's locations. That's one of the things that they've been doing to make sure people come and they see Dave & Buster's as a different thing. It was actually a staple in college. We were very close. Our college campus was very close to a Dave & Buster's. But I can imagine as we see more of the concerns for macroeconomic conditions, people may actually be looking at Dave & Buster's as a place to go for cheaper fun than like the Disney Worlds, right? So that may be an area where Dave & Buster's might do well. But for now, when the company reports earnings, it is expected to do earnings of around 94 cents a share on an adjusted basis. And the stock, however, is still underperforming the greater market. It's up around 9% year to date, below where the S&P 500 is, of course.
And you look at that range for the last 52 weeks between about 30 and the upper 40s, we're like right in the middle of that. It's like a sine wave going up and down as it sort of languishes here in the middle. But a couple things that always stick out to me: great stock ticker. Play hard not to get a smile when you see that. But I look at this too as a company. I don't know if these new photo ops, maybe it's going to be one of those grass things with the neon bar light sign on there. Who knows? But it sounds like they're willing to understand that things are changing, and maybe what drove consumers
Close another
to a
put.
Dave & Buster's
Keep
in
the
years
rest of
past
these.
might not
I
do
closed
it
like
now.
15%
Looking at what
the
is getting
position.
people excited, what's
No,
all
sorry.
the buzz on social
30%
media,
of
trying to
it.
implement some of those ideas. So Who knows if it'll work? I certainly don't know. I am not one to know what is on trend and what isn't, but I do know that they're trying, and I think that's something that investors can be excited about. We're going to look at 2 earnings previews for our upvotes. We'll look at GameStop as well as Dave & Buster's right after this. Rick Ducat, the chart master, will join us as we chart and trade. We'll be right back.
Yeah, I'm hopeful for a big miss on earnings on GME and they dump it down to single digits. The tiering. Single digits? Yeah. Yeah. There's some gap fills down in the $4 range. I don't know if I'll make it down there though, but let's see. We still haven't even retested 1540 level. So if we break that, which I think we could, then I think $10 is the next. So then it seems like a dip into the single digits would be pretty easy, but maybe not too deep.
buying the 20, selling the 17. We know the risk going in. It's $150 to make $150. With $18.50 being a break even. Doesn't need a huge move, only about 50 cents or so to the downside to break even. And if you get a little move below 17, which is well within that market maker move target of 1 standard deviation range, it's above that support that Rick had talked about in that rising ever so slightly trend line around 16 or so in those former lows, you can be at max profit. All the while, if the stock does surge, you're not going to be exposed for some multi-standard deviation move to the upside. We know the risk going in, and it's limited to the debit spent. So this is the bearish look. You absolutely, if you are a little bit more bullish or believe in this name, you could look at the call side and do something exactly opposite, where you're buying a call vertical, 1 strike in the money, selling 1 out of the money. It's just going to be a different risk profile, of course, than this one. This is the bearish look, Renita. Looking for a way that if it does disappoint, it does move lower, that investors could capitalize on that, especially just on a short-term move as this just goes out to Friday.
Thanks for walking us through that. Definitely a stock that hasn't yet tapped into a new way of doing things, a company that hasn't done that. Because really, when you think about it, how much longer can people go in the stores and buy video games anymore at all?
Why would you when you can buy it straight at home?
Exactly. That's the whole reason why we question why GameStop storefronts still exist in the first place. But let's talk about a different type of business model, one company that has recognized that you do have to change things and you do have to bring them into the 21st century. Dave & Buster's.
Well, it's not about to form an engulfing candle on the daily because the day is not
This is an interesting
over.
one here because earnings really
Lots of time
changed
for
the
that.
landscape dramatically here. You can see from our pre-earnings high where we closed here, we rose 40%.
Doesn't matter a whole lot with
up
earnings
into
tomorrow.
The yearly intraday highs just above 47. So really a massive movement.
I don't call us engulfing either.
Weeks or so.
If you count the
But we
wicks,
lost a
then
lot of
yeah,
those
it
gains, too.
would
It's
probably
kind
be
of fizzled
engulfing.
out since then. We're only up
But,
like
all right, I
maybe
got more puts there.
13% or so from that same
Got
point
back in.
now
But
that we've
I like to
fallen
count
off
the
a bit.
body,
The
body
move
to
downward
body,
has taken
and
us
it's not
below our
engulfing on there.
moving averages here.
But
Our
again,
yellow
with earnings
21-day
tomorrow,
or
it doesn't.
63-day, purple 252-day exponential moving averages.
I don't know.
We
I
were
don't like
looking
to
like we were
try
making
and
our way
trade TA
back
through
above
earnings.
our purple line here, our 252-day, but a pretty
Once that's over,
pretty
then we'll get
bad
back to
drop off today
algorithms
here.
and
We're down
trading the technicals, but
more than 3% now on the day here. And our moving averages themselves, the slope of the moving average is important to note. If it's trending upward, it's a good sign of an uptrend. If it's trending downward, it's a sign that things are maybe more tilted toward that direction here. You can see that our 2 shorter term ones, 21 and 63-day, both pointing downward. Our purple 252-day is flat. So at best, we're flat in the long term and trending lower in the short term here. So still within kind of a rather narrow downward channel here. You can see these 2 white dashed lines. They're parallel. I drew one first going across the highs, then just simply duplicated and put it across the lows
of the
to give us
day.
this channel. That can be a way to
nice.
project some support
Maybe even
and
this
resistance
pre-market
using a
level,
technique like
449 even.
and we can also see 3750, this green dashed line, was kind of an interesting point to keep an eye on as well. That's about where we topped out here and here as well. So I would say 3730 to 3750 or so. And then that was also where we opened up after that gap upward from earnings here. So that could be a point to watch for some support to the downside if we do keep trending lower. RSI not really telling us much useful information here, except one thing, a little tiny bit of bullish divergence here. Note that price is making lower low based on closing prices. RSI is very slightly trending upward. I really wouldn't put too much stock into that ahead of earnings, though, because earnings could completely rewrite the situation here. So I think it's worth at least mentioning just to call attention to it and say that it is happening, but I would not make a trading decision based on this little bit of divergence, especially when price looks to be making new relative lows and kind of trending lower here. In terms of resistance, our 252-day EMA, that's the line to break here to the upside. Then we've got our other moving averages and our trend line just above that, all between about maybe 40 to 41 or so. So a fairly narrow range where there's a lot of resistance.
Oh, definitely narrow, and we'll make sure we keep a watch on those levels as earnings come out for Dave & Buster's. Thank you so much, Chartmaster. Let's go back over to Alex and find out an example trade for Dave & Buster's. So walk us through it.
A couple things that are notably different about this name is, well, one, there's not weekly options, so we can't go as short dated as we did in the GameStop example around this earnings event. So naturally, it changes the dynamics here a little bit. and I looked at something that's a little bit longer dated. So while it's going to capture this earnings event, it's not going to be possibly as binary as maybe the GameStop trade is around those results. And so one thing we had talked about is its willingness to try new things and adapt. And maybe that has an investor feeling optimistic. I looked at a bullish strategy in this name around this earnings event, but going out to October, what we're looking at in particular is the buying of a call calendar spread in which we buy the October 45 call, which is up near those year-to-date highs, and sell the nearer term September monthly 45 call. Whole package for 30 cents. So this is not a large trade in terms of risk associated with the trade. It's 30 bucks in risk, as you can see, and best case scenario is a move right to that 45 strike over the next month and a half. And of course, just any up move around this event is likely to be beneficial. Those break evens estimating that September expiration, sort of how this one will perform in that range, but best case scenario is certain it's around 45. 30 bucks in risk. So one thing we always say, Renita, when it comes to this style strategy, Jenny and I talk about this being kind of like throwing a dart. Precision being more important than necessarily direction, so it's customizable to the extent that strikes are available, but also aim small, miss small. 30 bucks as opposed to 150, so it's 1/5 the size of the other trade that we looked at in GameStop, and so bear that in mind as well. But thanks to Rick, thanks to Renita as well. She'll be sticking around the rest of the show. Coming up next is FOMO, and we're going to be taking a look within that particular segment. We're going to be looking at CMG, Chipotle. Really, really good name. One that's getting some analyst love here today, right around lunchtime. Looking forward to that. B-roll always gets me excited. We'll be right back.
You could think getting
SPY coming down a little more there. 4 hops. GME holding up strong. know what CXAI is, but it's up. This is like they changed their ticker. Not sure. BBBYQ. Still down 11. Still looking good though. New high, higher RSI. Everything's looking nice. Still holding above that trend. Looking for 2750 this week. That breaks, and maybe that gap fill at 3124. Now the top of the shoulders here from this bigger head and shoulders we had.
Example of what we talked about back in the holiday season, Southwest was very much the airline that was under the spotlight for some of these same issues in terms of delayed flights, cancellations of flights, computer issues, whatever it may be. And we've talked about this happens to all of them at different times. This happens in all industries. But always a little bit more risk associated, of course, when it comes to something like airlines.
And you know, it's to their credit, to the people who are the critics about this. They say that the system has needed an upgrade for decades, right? The FAA system, the scheduling system that goes between airlines. They say that this has needed a huge overhaul in a while, maybe with the issues with Southwest and now with United Airlines. Someone in control will finally make some changes.
Yeah, one can hope. At this point, this is still relatively developing. This is the story as it stands right now. Doesn't seem to be any type of really super negative, other than some flights being grounded, possible delays, of course, associated with that. But if anything else is to come, we will certainly update. But the stock right now down 4.5%. And if you kind of flip across and you see some of the other airlines, Southwest now down 2%. American down 3.6%. So I think this brings to the forefront some of these issues again, and as you said, possible things that will need to change down the line for all of these companies. So we'll see. We'll come back to it if anything else is warranted on that story. But kind of a rough transition here, but a natural one as we come to FOMO here in the lunch hour here in Chicago. Chipotle. I know that this is a place that certainly in my younger years I frequented probably more than I should have, but it's a great location. It's one that in some ways has set the standard for fast, convenient food and how to scale a business but not lose quality.
That's a good way to put it too. And also how to show people how to use its own products well. Not just products, but I always joke about this when I'm talking to Oliver. You can get 2 meals out of a burrito bowl, and it's become one of those stocks that are doing well in a downturn because people know that, because maybe they don't want to go to McDonald's. That's usually a stock that does extremely well in a downturn as well. But they have options at Chipotle that are different. And today, this stock is seeing a little bit more activity, although it is slightly lower. It was named a fresh pick over at Baird. Now, this analyst says that he sees signs of strong same-store sales momentum when it comes to traffic, rather, not sales, but traffic that'll eventually translate into sales, right? But he says that Chipotle is remaining the top idea for investors with a 12-month horizon, and that they see an attractive near-term trading opportunity for the shares. Now, this is also based on the potential of multiple positive catalysts to emerge in the coming months for Chipotle, and that's why Baird also reiterates its outperform rating on the stock. And this stock, by the way, Chipotle Mexican Grill, is up year to date by a huge measure, almost 40% higher year to date. It's outpacing the S&P 500, of course, and people are still buying burritos.
This has been a name that seemingly, as long as I've covered markets, has consistently outperformed. Might not be up the same margins you see a name like NVIDIA at any given point, but it has been a steady outperformer. I mean, really the only downturns that I can remember are around COVID, where everything was lower. It's snapped back by, you know, May of 2020, it was already at new all-time highs, where you didn't see that in very many other names, as it was able to adapt and move quickly. It's always been able to drive hype, be it new product releases or ways to, you know, kind of get your bowl or burrito or taco or whatever it may be. Consistent, you know, control over its own price, and that elasticity of the demand allowing for increases in prices, yet no drop off in the amount of burritos or burrito bowls that they're selling. But it had been a little bit more of a sideways performer, I would say, in 2022. But the market itself was lower. So even at that time, maybe it's not screeching to new all-time highs, but it's outperforming through resilience. This has been a name that is focused on growth, but also, as I said, really focused on its quality of its product. You talked about the analyst over at Baird and kind of the excitement that they see in this one. And it's really not, as much as they want to call it a fresh pick, this is the story of Chipotle. They're kind of highlighting what Chipotle has done so well. It's no surprise that nearly 7 in 10 of analysts that cover it, of which, you know, there's over 30 of them, have a buy rating. There's 0 sells. The others are in the hold camp. So tons of optimism here, and a price target from David Tarantino of $2,400. You know, we used to see these big stock prices when you saw Amazon and Alphabet on a daily basis carrying those, but Chipotle, the one holding strong, refusing to split its share price, even though some of those other big ones decided to.
I think that's amazing too. The fact that its stock price is so high, it's not necessarily one of the legacy names that we've seen here for decades on decades. It's a food place. And just to let you guys know, Chipotle now has 3,236 restaurants in the United States. As of August 16th of this year. The state with the most Chipotle locations is California. They've got 466, and the company is still, you know, apparently planning to open up more Chipotle locations around the country. So we'll find out just how far it goes in its earnings report, and how many more things that they want to, I guess, push forward as the catalyst for this stock.
Along those lines too, robust growth still, same-store sales. So they got more stores, but they're still growing them, you know, organically at the stores that they have. Some of that's due to pricing going higher, no doubt about it, but it's still impressive. Fairly high margin for a restaurant too. You don't necessarily associate restaurants, particularly fast casual restaurants or, you know, fast convenient restaurants, as high margin businesses, but Chipotle doing its best on that front as well, managing those costs and passing them on in terms of those avocado. You know, avocado, I don't know if there's avocado futures or not, but if there are, I'm sure Chipotle watches that very, very closely with the guacamole. But this is a name that, for good reason, you know, one, because, you know, kind of what Warren Buffett said, people like to invest in things they like. A lot of people, especially younger, you know, folks, really are fans of this place as a place to frequent for lunch, for dinner. You don't feel so guilty leaving there that maybe you would in some of its peers.
Right.
But also, it's been a winner, and I can't stress that enough. Year to date, 40%. 52 weeks, 20%. From the lows, 44%. You go out
Hold a couple more.
and it's very difficult unless you're on the super short-term basis.
I hasn't even gotten low of the day, so
earnings,
they'll just
it's
stuck
really hard
within
to
its
find a time
range.
in which this one is underperformed, as it's just
This
been
point
a stock
so
that's
far.
done really, really nicely.
Well said. Absolutely, when it comes to Chipotle, and for the, you know what I find interesting, for the most part, it's had the same products most of this time, right? With, you know, they've included a couple of new products over the years, but not many. And people sort of rely on this stock as a stock, and it as a restaurant, and in so many different areas. It's
basically
been
just
consistent, but
consolidating still.
And I like, and I respect
No breakout,
the
no
fact that they've been
continuation.
able to grow that store footprint.
HE
You know,
down,
I
Hawaiian down
just moved. I don't live in
16%.
downtown Chicago
There's your
anymore, yet I'm closer
bouncy
to a
bounce.
Chipotle now, and it goes to show that they have scaled effectively. They're not just in really urban city centers. Yet the quality has remained, at least
Hey, psych you
where
up.
I can't see a seemingly a drop off. And the only other company, and it's a totally different one, I like to make comparisons from time to time because I think it gets that point home, is Lulu. Lulu has scaled dramatically, yet that perception of the brand quality has remained. And if you're going to be a company that is at a premium price point, of which Chipotle and Lulu both are, you're going to need to hold on to that perception that your product is worth spending a little bit more on. And both of them have done that quite nicely. From a trading standpoint, though, Renita, this still is, I think, a story. It's been a tough one to bet against, no doubt, but it's also up 40% year to date. It has disappointed on its most recent earnings. So I looked at a more neutral trade strategy, one that can look for more of a price recovery to some extent to gain back some of that lost ground over the last few weeks, but isn't necessarily looking for a massive move either direction. I'm looking at selling an iron condor, in which we basically are surrounding this stock price with two vertical credit spreads. Doing so to essentially cast the net and asking this one to kind of stay within that net over the next 45 days or so till that October 20th expiration date in the October monthly cycle. And so what I looked at on the put side was selling the 1825,
All right, Bubba, we'll see, bud.
and the 2100, 2110.
Dollar's starting to rally a little bit here.
And so when you look at that, first thing you'll notice is this is the biggest trade in terms of
That's been
examples that we
rallying.
looked at, but it's also the biggest product that we looked
Yeah,
at.
big pump on it
GameStop
today.
was sub $20, and in the case of David
Interesting,
Buck,
it's not more of a sell-off.
$40. We're now talking about a stock that's nearly $2,000,
Market.
and so that's going to naturally scale the size of the game that's
Oh,
being
what was
played.
it?
And the reason
Debro
being
Jutro?
is, well, options are, at least in
Debro
standard forms,
Jutro.
a contract for 100 shares of stock. Well, 100 shares of Chipotle
I don't
is
know
a lot
Bosnian
more
accent
in terms
that
of
well.
dollars than 100 shares of
I'm trying to think
GameStop.
what that
And
would
so
sound
naturally,
like.
the trades
I don't
get a
even
little
know.
bit bigger as you talk about a bigger product. And so
I'd probably end
what
up
we're
just
looking
doing
at
a
here
Russian
is
accent or something.
Again, that 1825, 1815, 2100, 2110 Iron Condor in the October monthly
Amy does have a
expiration.
bull flag out of
We're
that
able to get a
resistance, so if
$3
there wasn't
credit for this, that
earnings
would be
coming
30
up
cents on the dollar
tomorrow,
of
I would
risk. So it's
say.
a $10 wide spread.
Oh, it's weird. It's not
30%
on
of that is
anything but
$3,
the shorter
so
time frames.
$700 in risk for $300 in max
I guess maybe
profit.
I'd wait for a little more
Break
confirmation.
evens, 1822 and 2103. Simply just subtract $3 from the short put strike.
Barbecue,
add it
little
to the
green
short
candle
call
there.
strike,
Moving back
get
up to
those
VWAP
break
maybe.
evens.
It's on
But what I like
10.3.
about this strategy, Renita, is we're oftentimes put in this box of, do you like this stock? Do you not like this stock? Are you bullish this stock? Are you bearish this stock? And what I learned, especially when it comes to options trading, is you can actually be neutral on something. You can actually have an opinion that, maybe just kind of goes sideways from here and still participate. And more importantly than that, we can create a risk profile, as we see up here on the screen, in which this stock can be between 1825 and 2100. That is almost, actually it is $175 of price performance, nearly 10% of the stock price, and be not just profitable, but max profit at expiration.
Wow, very interesting. And I never thought of it that way. You can absolutely be neutral when it comes to these example trades. So thank you for walking us through that example trade. Very tasty options here. But when we come back, we want to take a look at Tesla. It's winning the EV race. It just came out with some numbers from China. So Next Gen Investing is up next.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had
Debro Jutro. No, that was not Google Translate speaking good morning in perfect Bosnian, by the way. By climbing back up
out over the weekend
a
here,
lot,
we did state
potentially.
that Tesla actually made around 84,159 China-made EVs here. That was around a 9.3%.
Yeah, still in the choppy. We'll see if we break out today. Coming up 15 minutes to 2 o'clock, so getting into that time of day where we could start making some moves.
30.9% on a month-over-month basis.
Hoping it's the downside. I'm still holding some.
To those deliveries, so we are seeing some growth here and some impact when it comes to these pricing wars that we.
Especially since we kind of broke this
but at the end of the day,
longer
Tesla
term
has committed to having this strategy of trying to be very price
trend.
flexible, and with
So maybe getting a pullback down to this high.
With these gigafactories, they want to be able to maximize them as much as they possibly can.
445, 14.
Then the incremental cost per vehicle also increases,
As part
which
of
is not
this
going to be a benefit for them. Now we did
cup
hear
and
some
handle
chatter last
could be
week when
forming
it came
here
to their Berlin factory and potentially having them reduce their production targets here for the end of July and into August. We're going to see if that actually does
time to buy Chipotle.
Maybe that's some softness in the market, or maybe they are retooling it for another model that they're going to bring out here in the near future. But when you're looking at the China data, we are seeing a lot of cars being sold here. They are capturing some market share, and I think that's a really big positive for Tesla. And we are seeing the shares up around 4% in the session right now.
Instead of coffee and OJ? You know, I've never actually tried coffee and oranges together.
It actually is against its peers that are
no, I haven't tried that Celsius.
But it's not actually on top when it comes to the numbers.
I'm not.
Numbers basis.
I like
it did on
coffee is like good for you
basis,
though.
Month over month. But can you tell us
not just
a little bit about
I'm not just in it for the caffeine. I'm in it for the antioxidants and stuff.
Versus Tesla during that quarter.
I know it's kind of a silly thing to say,
so
but
the biggest
I think it's healthier than an
BYD,
energy drink.
They actually delivered around 274,000 vehicles for the month here, and that was actually around a 57.5% increase on a year-over-year basis. But one thing to note, Nicole, BYD really does focus on selling hybrid vehicles. So Right now, China's data kind of mixes in hybrid as well as just pure EVs or BEVs, electric vehicles. So sometimes this data can be a little bit skewed. And the reason why
San Pellegrino. That's pretty good, like sparkling water.
data points together is because the
Yeah,
majority
probably
of
like
the
it.
population that's buying these hybrids are really only utilizing the electric portion of the hybrid vehicle because they
Is
live
it
in
sweetened with stevia?
predominantly, populous areas, and so that's why they really mingle these numbers together. But if you're looking at the profit margins and when it comes to the
Yeah, I'm not a huge fan of the
sales
Coke
in
and
itself,
coffee.
Tesla
I've tried
still
those
does
actually.
outperform. They're just not
Yeah.
outperforming when it comes to
I like
pure
both those drinks
volume
separately,
being
so
delivered to China customers. But
I don't like
once
to mix
again,
them.
you have to have that balance of having the most deliveries and or the better profit margins, and that's really why we have seen a huge premium when it comes to Teslas, because they're able to profit a lot more when it comes to their cars at 18%, 19% here if you're looking at the United States, rather than maybe some other EV players or hybrid players that are out there that are only making around 5% or maybe 6% margins when it comes to the cars. So obviously they need to sell more in order to be a little bit more profitable. So it's kind of a double-edged sword, but Tesla's definitely taking it in stride and continuing to ramp up their production in China. And hopefully we start seeing a little bit of an end to this price war, a little bit more price stability here, and that's going to provide investors a little bit more ease or calmness when it comes to the future outlook for Tesla here in the near term. In the long term, investors that invest in Tesla are really bullish on this name, and I continue to talk to them on a day-by-day basis.
You know, Kev, I don't know why we're continued to be surprised by this. I mean, this is just seemingly every single day. There's a million
GME is
stories on
after hours
Tesla.
tomorrow.
At least today,
So
the balance
the call will
of
be at like
shifted
what,
to the
4:30 or
positive.
something.
Stock up almost 5%.
Earnings
Though. It's pretty
sometimes
impressive.
sometime
Thanks
before
to
then.
Kevin Green for the breakdown of the laundry list of Tesla stories from over the long weekend. Coming
Read
up
the
next
ball.
is Under 30. Renita and I will be joined by George Tillis, and we'll continue the autos conversation as we take a look at Ford Motor. We'll be right
Dang,
back.
now Spy's doing this little inverse head and shoulders down here. Followed by then a bearish pattern. Liquor gave back some of its gains. Kind of in its flag. Day only water. And shoulders angle grab. That's like close to death, isn't it? AMC came down a little bit. It's up 1.5. I like Fubo's price action. Nice and volatile. Look at this bull flag, bull flag. Got a nice range, kind of volatile, yeah.
Year over year. Now, truck sales were still higher by 8%, but I think the SUV market is getting a little bit saturated. There's a lot of competition. And that's an area where there's a lot more price sensitivity. And I think the elements behind this whole new business model around autos right now, which is a high price, low volume model, I think it's starting to see some cracks because of the fact that unaffordability is just becoming very egregious from the standpoint of the average consumer not being able to afford just an average SUV now.
George, question for you. This is it would be an unprecedented situation when it comes to a strike. We're in a heightened environment for strikes that's happening when we look at what's happening in Hollywood and what was able to be avoided with UPS earlier this year, as well as pilots. But what kind of impact could this make on the big three automakers and the industry?
Well, I think on the industry, you have to separate the companies that are more affected by the UAW versus not. And some of the international companies, if you look, like I said, TM or Toyota, HMC, Honda Motor, both those companies are higher today. So I can tell you right now, the market basically is telling me or is communicating that the UAW strikes are affecting the domestic automakers much more so than the international ones. So that's the first thing to keep in mind. I also think that the companies that are still selling passenger cars from a business model standpoint are performing better because they're a little bit more affordable than SUVs. And I think that's another thing to keep in mind.
Thank you to George Tillis for the update on Ford.
We got a continuation,
for the TD Ameritrade Network. Real quick before we say goodbye, Renita. Ground stop, it's canceled. The stock making a U-turn here intraday. It's still down on the session, down just over 2.5%. But
get your
take a
VWAP
look at United Airlines. The stock has recovered over $1 off of its lows intraday as the FAA now reporting ground stop
Mitosis works?
No details, no update. I'm assuming the technology glitch or equipment outage, as it's been reported as,
healthy,
at this point.
Still chemicals.
Ground stop, though, is canceled. Thanks to George Tillis. Thanks to Renita Young.
I know it's like a healthy energy drink, but it's
hour as well. That's going to do it for us here
not
on
like
Next Gen Investing. Coming up next is the watch list right here on the Schwab Network.
You lost 12 pounds of vacation drinking Celsius? What would you do? Did it make you eat less? It's a suppressant, right? So you aren't as hungry? Thanks, like you. I appreciate it, man. I get into ketosis every day. Intermittent fast. I don't need to not eat for months. Say fat friend of world cricket shortage. Good thinking, Bubba. Basically, no more happiness, psych you up. No, my wife's got me on a keto, a subtle keto diet. I won't even know, and then I'll just have waffles one morning for breakfast and like have to go to sleep for an hour after. Like, what happened to me? She secretly gets me on these really healthy diets. If you can engulf you on the 5-minute, that'd be neat. Quite make it to VWAP, so that's good for the Bears. No such luck. SPY chopping back up to VWAP. Having waffles, yep. Person diaries. I don't want to miss a second. That's nice, kitty. SPY still stuck in this dumb wedge. Maybe a breakout by end of day. Probably in the last 10 minutes.
Saudi Arabia and Russia
All the move.
extend those output cuts until the end of the year. But there was also the other side of the coin that China would provide less demand. Dollar 104.74, that's gaining. Gold pulls back $15 at
Actual dopamine.
$19.51 a troy ounce. Oil gains. Bitcoin 25,810.
Barbecue looking like it's maybe gonna start climbing. It's back to VWAP. It's down 9 1/4.
Caroline Woods, senior markets correspondent here on Schwab Network, to take a look at Tesla. Some good news on those deliveries.
Yes,
some positive news out of the delivery numbers in China.
Just taking
Tesla shares up about
a gluten coma nap.
Today saw
Gluten
a month-over-month
induced.
and year-over-year increase in August. So those price cuts that Tesla's
Mommy,
been doing
why is
over in
Daddy
China
sleeping on the
have really
couch?
helped to spur demand amid, of course, what we know is a tougher macro backdrop and increased
Ruling
competition
everywhere.
over there. We'll talk about the competition in just a second. But according to the China Passenger Car Association, Tesla sold more than 84,000 made-in-China EVs in August. That's an uptick of over 9% from the year-ago period. Month over month, sales climbed almost 31%. Now remember, back in July, Tesla saw a dip in production because they had to retool their Shanghai plant. So that was sort of expected there. But just to kind of see how that Tesla's 84,000 compares with some of the domestic manufacturers, NIO saw sales rise 81% year over year in August to over 19,000. XPeng up 43% year over year to nearly 13,700 vehicles. Li up 664% to just below 35,000. And BYD, of course, China's biggest EV maker, saw sales year over year uptick of 76% to 145,600. So that one is the only one that really outpaces Tesla by quite a bit there. But as you
GNS,
take a
little
look at
popper.
shares, I said Tesla shares up about 4.5%. If you take a look though, NIO, BYD, and Li
They're
all
waking up
lower
like
on
10
the
minutes
day.
ago.
Li significantly lower, down about 6.5%. XPeng
Right around
is
that
the
dollar
only
range.
One of those that's actually higher, up about 0.2%. So Tesla, the clear outperformer
The
today.
even
based on
dollar
some of this
rally.
data.
Yeah, I mean, the stock's up
Even dollar
108%
support.
this year. The thing that's worrisome is those year-over-year
She's a
growth
fickle one.
charts to Tesla's 9.4%. It was 80% growth, 600% growth. I mean, even though Tesla's still the market leader, the growth that you're seeing in those other names.
But if you take a look at some of the numbers, 19,000, 35,000, 13,000, so they're just scaling up.
Growth numbers, because then it really makes Tesla look,
especially with BYD going so.
Yeah, that's Warren Buffett.
Yeah.
Warren Buffett loves that one. How about Zscaler? Because folks, we're going to be watching Zscaler after the bell today, right?
Yeah, shares up about 1.6%. They'll report earnings after the closing bell today. This is, of course, a cloud security company. Has been performing well all year, up about 45% or 44% year to date. Now, from cybersecurity numbers, from cybersecurity companies, we've been seeing some mixed reports. We had Palo Alto, of course, exceed with their billings outlook, sending shares higher, but then Fortinet last month warned that deals were being delayed because of the tougher macro environment. So kind of some mixed signals here. But we are seeing some positivity for Zscaler heading into the report. In terms of what analysts are actually expecting, adjusted EPS of 49 cents per share on revenue of $430.42 billion. So that would be a sequential improvement from the previous month and also significantly higher than $318.1 million reported in the year-ago period. That would be about an increase of about 35%. Billings growth, of course, will be key. as will the outlook. It previously said for the full year it expects revenue of around $1.59 billion, billings of about $1.97 to $1.98 billion, and non-GAAP EPS of $1.63 to $1.64. So keep those numbers in mind when Zscaler reports, just in case we see any updates to those changes. And of course, commentary about witnessing or harnessing the power of AI. This is an AI play as well. Their Zscaler Zero Trust Exchange lets customers kind of enforce policies around AI, so should be a beneficiary or continue to be a beneficiary on that front as well.
As you talk about AI, and I think about autonomy, first of all, Zscaler is one of Dan Ives' favorites. Autonomous vehicles, right, using AI and all the data and all that. Going back to Tesla for a moment, Kathy
Got her hair fixed.
talked about 2027, $2,000 was her price target for Tesla, and actually said our confidence in autonomous has gone up. And so you'll conclude what you want with that. But in the meantime, I mean, you know, people are sort of laughing, $2,000 for Tesla, but she still is in that camp.
Years ago, Kathy Wood, I was chatting with her, and she gave
Stevie
her
Herpin or
very
Jenny?
bullish price target.
I'm
for
sure they
Tesla.
have
This was
makeup,
before the
hair and
pandemic,
makeup.
I remember kind of it was eye-popping, and sure enough, Tesla reached those levels. I do think that, you know, it's interesting. Tesla is one of those names that on the street analysts are very
still
divided
going a little
on.
bit.
So when you take a look at the breakdown, not including names like Kathy Wood, but the analyst community, there are 18 buy ratings, 21 holds, and 7 sells. So actually more in the cautious camp than anything.
Right.
And the price targets are as low as $24. Gordon Johnson, who of course you know is
Coming
as
down
high as
here, so
$350.
maybe a little
Dan
inverse
Ives
cup and
over at
handle. I
Wedbush.
mean,
So
it's, you
not
can
quite
see
to
every which
Kathy
way on
Wood's
this chart right now because it's just
2027
consolidating and
target,
chopping around.
but
So
they really are all over the map.
without a break of the highs or lows, it's
Thank you so much.
been a bunch of false signals.
Okay, time for Technical Tuesday. Let's welcome in Kevin Horner.
Have this
Senior
wedge
Manager of Trader
keeps
Services
getting
Education
closer,
at Charles
closer
Schwab.
the center
Good afternoon,
of
Kevin.
VWAP.
So today S&P is
A
pulling
death
back.
spiral of
Was a
theta
winning
decaying
week.
options.
You know, we saw the S&P 500 with a winning week. Actually, it was the best week since June. What did you think of that? And what do you think we're watching here now at these levels?
Well, very short run. We're watching the low we just tested today, right around on the SPY, right around 449 or so. You know, these last 4 days have been fine. You know, rounding out last week, the move we made higher on Tuesday, the 29th, was fantastic. That was a beautiful candle. Took us through the 50-day
There you go,
moving
barbecue.
average, and traders are
2388
certainly good
down
with that. We could have
7.7.
been even
Up above
more
VWAP now, though.
enthusiastic if we could pop through this 454 ledge on SPY that we
Still
set
looking good.
dating back to the 2nd of August. This was kind of a gap move we made from August 1st to the 2nd. So we've run ourselves to basically the high of this gap zone. And if we start pushing through that 454 area on SPY, bullish traders are certainly going to think about targeting those prior short-term highs we had in the neighborhood of 460 or 4,600 on the SPX. Plenty of reason to think that some of that maintains, but I do think that there's also reason to make sure you're managing yourself along the way here. I'd like to see the follow through from this. If we start working our way back
12.5% on GNS. SPY is coming down here a bit.
We could see some additional short-term
If you got
weakness
the
or
chop.
draw down to that 50-day moving
10 after
average.
2 almost.
But ultimately, everything we continue to see here, Nicole, remains optimistic and positive. I think we just want to see some continuation and follow through from the price action in what historically proves to be a bit of a difficult month, that being September, of course.
Understood. So we'll watch a lot of those levels. In the meantime,
What did you guys do for Labor Day?
On your list today, what are some of the technical trends that stand out to you?
Or Labor Day weekend.
This is all about the channel we've been trading in. This is great. We've gone sideways for the last 4 months or so. This thing has done a nice job of consolidating, which is exactly what traders are
I
wanting
end up
to see.
laboring usually on
The reason
Labor Day.
I say that is we've undergone an
You need like a
18-month
weekday off.
downtrend reversal that got
Then
broken
full time in the
here
market
in
now is like
middle
just
of
a
May. And so
bonus
what's
day off to
interesting
get
to a
stuff
lot
done.
of traders is not that it broke it, but that you've created
Just
a
do a lot of
$20 range thereafter.
a lot of work
since
around the house. The
mid-May
garage stuff needs to get
through
done.
basically today. Now, there's been a couple of
Weather's
starts
nice.
that
Weather's
have been denied.
perfect.
We had this breakout back on August
Got a lot
1.
done outside.
That did not hold.
Awesome.
We got thrown back to the bottom of the channel. So we traded as high as 165, 166, and got all the way back down to 140 very quickly
Baldur's
thereafter.
Gate, Moon Milan. Yeah, I did
We're in
lawn.
the exact
Tons of
same
landscaping.
scenario of trying to get through that
Baldur's Gate. Is that a role playing?
166 ledge we
I think we've talked
created
about
on
that one before.
August 1. So new traders here
Baldur's
are
Gate.
probably sitting on their hands a little bit, Nicole, because they're waiting
There's a
to
role
get
playing video game
some
set in the
clearance
Forgotten
of
Realms,
that prior
Dungeons and
high,
Dragons.
which will allow them to set exit strategies below that prior high, giving them a nice tight zone for exit, meaning low risk opportunity for a potential breakout, which could lead to maybe 20 points to the upside, the height of the range we've been in. So it's a very important move we're in the midst of right now. Can we get some clearance through 166, 167 over the coming days? I think that bears watching. But, you know, if you're a holder here, this also represents for a lot of traders reason to maybe take a little bit off. We just don't know how we're going to handle resistance. So while things are improving, if you bought this up just a week and a half ago at 140 and are sitting up 25 points, a lot of traders would take just a little bit off and say, hey, great job.
There you go, barbecue. 2040
Let's see if we can break out with
or
the remaining
2420,
shares
2420, 2440. It's down 5.5. This thing might go green today.
CrowdStrike to Packard, another stock that you're watching. What are the technicals telling you there?
Well, this one at least fits in nicely with a group that's done well. Machinery has done very well, up nearly 22% year to date. And what we're in the midst of right now is this consolidation triangle. It looks like a perfect retreat to an area of support, that being right around 81 here on the downside. That actually has held quite well. Going back here now for about, I guess about the last 5 to 6 weeks. And that looks really interesting because 81 is the 38% retracement, Fibonacci retracement level off the move we made from June 1st. And so that represents an area where bullish traders are looking to validate support. It has been tested previously as recently as last week, and we're sitting on it right now at around 81.80. So, you know, this certainly gives traders who are, again, looking for lower risk entry opportunity, a spot for consideration if you think it's
nice. How's your
$90 high that we
how's your new computer handling the game?
Here in the middle of July, that represents
always nice having a
risk
fresh
reward.
computer.
The trader can also,
all
of course,
fast.
do so piecemeal, getting in a small portion, get yourself started, and then look for maybe a break of that downtrend line from the $90 level. Some traders might look at that initially over, say, the 50-day moving average. That's just shy of 85. But if we started to clear the highs of the last 3-4 weeks around 86, I think you'll see more traders even more confident in this opportunity to the upside. Now, of course, Nicole, all of that means we got to maintain 81 as support. If we do not, the breakout ledge that is then in play for the downside is in the ballpark of 77, and that looks really strong for support. That's also the 50% retracement zone, or pardon me, the 61% retracement zone. So that would be kind of a last-ditch effort for bulls who are sticking with a position.
14, GNS is going again, 15%.
Done very, very well.
Dude, this thing just turns on. It's so crazy. Reminds me of GME.
Thank you for technical
Old
Tuesday
GME.
today. We appreciate it. Kevin Horner of
Nuggets from McDonald's, played Apex all day. Crap out GME, why no fly?
Is joining us. They're going to be ringing the bell tonight and wanted to.
I don't know what the rest of that meant, Alfred. What do you play Apex on? Yeah, that's true. Reinstalling everything does kind of suck. Wow, that's loud. SPY still chopping. GNS almost 15% there. 15, almost 16. $45 and $25. Nice. Nice kitty. Yeah, no, that does seem high. I can't remember what the average was, but especially if you're noticing it temp lagging or whatever. Barbecue? Nah. Barbecue.
Yes, Dana Peterson's here, Chief Economist, the Conference Board. Thank you, Dana, for being with us. So, what are you thinking about the economy? We've gone, sometimes, you know, in the first half of the year, everything felt a little hotter and running hot. And the second half felt like we were things came in either at or below a little bit, some of the consensus numbers. What are your thoughts? How are you feeling?
I still think we're getting mixed messages here. Yeah. When we look at the consumer, on the one hand, they're saying, yes, we're worried about jobs ahead. We're worried about inflation and finances and income. But then they go out and they spend a ton of money in July.
Their solution to
so
spy
what
chop.
they're saying what they want to do and what they're actually doing is very different. When we look at the labor market, we're definitely seeing slowing in payrolls. The unemployment rate did tick up. It could tick back down. But then wages are not really
on
slowing
GNS.
that much, despite the fact that companies are taking down those job ads.
Reaching back for that channel.
And that's part of it. And, you know, August seasonally is that month that always seems to fluctuate because everybody says there's always revisions in August. And the prior 3 months, we had minus over 100,000 jobs than originally.
Yes,
also, there's a feeling that, you know, these are just like whisper things, but for example, the JOLTS number, that there's actually not as many jobs. And even though it came under, right, there weren't as many jobs as anticipated, but that there are fewer jobs than that. I mean, do you think that we're seeing some sort of tide happening here?
I do think the tide is in the direction of slowing labor market.
Oh yeah, that's weird.
Companies, even when we ask them, say, look, we're not really looking to hire a bunch of people, but we're also not really letting people go. Many of them are just sitting tight. They're holding on to workers, but they're not really raising wages that much in many instances, and they're also reducing hours as the price of holding on to those folks. So I think that the labor market is certainly cooling at this point.
Within the jobs report, you know, labor force participation rates ticked up. You mentioned wage growth, which isn't really slowing too much. It seemed that so many sectors were adding jobs. You didn't really see a scarcity of jobs, you know, from sector to sector. It was a lot of up arrows.
I should close more puts down here.
Was there anything within that jobs report that stood out that either was consistent or inconsistent with what you're thinking? You're waiting for the next one, maybe.
Oh, I missed my hand. Dang it.
Well, I thought what was interesting is the fact that labor force participation ticked up. It was mainly among younger people, but as soon as they joined, they were unemployed. So that suggests that maybe there's some nervousness about incomes going forward. So they said, let me switch from being, you know, self-employed or a gig worker to looking for a job, but there aren't as many jobs out there to find.
Yeah, understood.
There's
and
VWAP on SPY.
Next week we'll get CPI. But what do you think? I mean, I think almost everybody is now thinking the Fed will not raise in September, and they may or may not raise in November even. What do you think we might hear?
Well, we think they will take a break in September, put out the SEP, and also allow those lags to continue to filter through. Certainly, we already know that monetary policy has dampened housing. We're starting to see business come off in terms of investments away from factory building, but it's really the consumer. So if the consumer continues to spend and inflation continues to struggle to come down, especially on the core, the Fed could come back in November.
Yeah, well, that's the thing. And how about oil went up to $87 today? You know, I haven't seen that
over
print in
VWAP
a
now.
long time. And the concern I have about the consumer is, you know, you have this bifurcated consumer, like the ones that are doing well and still out shopping, and maybe they're a little more cost conscious, but then you have the others that are really facing still very high inflation. If gasoline goes up and they're already penny pinching and they have higher credit card rates, that doesn't, I mean, I know Goldman Sachs brought their likelihood of recession from 20% down to 15% today, right? Soft landing, probably not a recession, but it does make me nervous about the consumer.
I too share that sentiment. You have a number of headwinds that are on the way. All the excess saving that consumers built up or received from federal government stimulus checks, that's starting to run dry.
Yeah.
Also, as you mentioned, many consumers are over-debted with credit cards, and
they're falling into 90-day delinquencies, and we're seeing more banks charge off. So that's really not a great picture. And certainly with student loan debt, at least on the interest, consumers who have them may have to start paying. So all that suggests that we're not going to see a great story for the consumer towards the end of this year.
And they're putting aside some of the big purchases too, because that's very costly. I mean, final thoughts just also about the bigger
Barbecue
picture,
holding there a little
because
bit.
We have China slower.
GNS holding up
than
also at 12.5.
anticipated. You still have the growth in Japan and India, but anything on the global footprint, because the feeling was China had slower growth, but now we're seeing some weakness in Europe, for example, and that could all sort of move our way, right? Or not. I want to give happy reports, but
Sure.
you know, I like to be realistic too.
Well, the good news is that the U.S. mainly imports content from China, so a slowing in the Chinese economy is really not going to have a huge impact on the United States. But certainly in a global perspective,
Cheaper
if
imports.
China pulls back and Europe doesn't really recover, then we will have weaker growth going forward.
Right, and we have this, you know, the dollar's been moving higher a bit, no doubt. So what did I leave out here? I mean, what else you're watching most closely? Within the Fed, for example, they seem to still say they're data dependent. Waller was out today this morning, and Waller was saying, look, you know, we've already gotten burned a couple of times, you know, where we thought inflation was done and then it reared its head again. So final thoughts here on that?
I think there really are concerns about it, that inflation smile where we see some easing, the Fed pulls back, and then it comes roaring back, and the Fed has to return and really hammer the economy. So I understand why Fed officials are still very cautious right now.
Yeah, understood. Dana Peterson, great to see you of the Conference Board. Thank you so much for being with us today. All right, let's take a look at some more movers in the market right now.
Lords?
Manchester United stock has dropped more than 20% today after a report that the Glazer family intends to take the soccer club off the market because bids haven't met price expectations.
No way.
Mail reports that Glazer's attempt, well, they'll watch for that again in 2025 when better economic conditions could attract more bidders. Zoom Video shares jumping more than 5% today after the company announced that its AI companion could be available. No additional cost with paid Zoom user accounts. The company first introduced generative AI tools in early June as part of free trial. Illumina shares are trading lower today after the company appointed Jacob Faison as its new CEO, roughly 3 months after parting ways with Francis D'Souza. And D'Souza resigned after a bitter proxy fight with activist investor Carl Icahn, despite securing enough votes to stay with the company.
Illumina.
Faison comes to Illumina after serving an executive at Agilent. And Occidental Petroleum
what you
is
guys,
among a group of oil companies
that's all
trading
in?
higher today after Saudi Arabia and Russia announced an extension of oil production cuts through December.
That
Saudi
kill anybody's
said
tin?
to cut 1
The
million
Illumina?
barrels a day of crude oil
That Illumina
through the
news?
end of the year,
Or
while Russia
Illuma?
will cut 300,000 barrels per day over the same time period. Here's a look at Bitcoin right now. Take a look. 25,820. It's gaining slightly,
Oh,
but
we're done.
well
Let's
off
go,
of
baby.
its recent highs. All right, coming up next, Exponential Fitness stock is up
I'll bluff
20%
that.
year
Let's
over
see it.
year. CEO joining me next. Be right back.
On toilet urinal game? Ah, I missed the dime. That's the thing with playing without real money. It's just like you don't get realistic gameplay, unfortunately. I have noticed though in this game, once you up the blinds and play higher stakes, people do that are better. They kind of seems like more of them play a little more realistically until they start tilting, and then it's just out of control. At VWAP, 30 minutes to power hour. Got some side hold'em going. Wait for that final move on SPY. This move actually here wasn't bad. If I wasn't chasing back losses from the day, that would have been a nice profit, this drop. It'll piss people buying Tesla? Why? Need to buy in for more. You guys are playing way too loose. Need to buy in for more. These guys are crazy. No reason to fold. I only have 14,000 left. Like one big blind. Diamonds, there it is. You hit with the diamond. Nice. I just made new accounts, so it's resetting all my stuff. GME still consolidating up there at the WAP. GNS holding up pretty well.
That have been in business for years in corporate America. You know, they have a couple $1 million net worth, and you know, they're looking to do something else, something that is semi-absentee and something that they enjoy and love that can be great for their community. And so, you know, they come to us looking for those things, and we help support them and put them in business.
On the latest round, missed on earnings,
Oh,
beat on estimate on
holding a little bit more, and
sales.
they're not going
Tell me
all
about the
in.
outlook of Exponential Fitness.
An easy, slow play.
You know, we continue to leverage our SG&A, so going from, you know, 17% margins to
Totally
low 30%
call it.
margins and crossing 40% next year.
That's
and
great.
so, you know, EBITDA continues to climb, revenues are climbing. We're opening about 550 stores at the midpoint, so a store almost every 15 hours all year long. So we're operating in the U.S. and
No
19
cloud,
countries.
just good.
Is
Good.
Investor Day here tomorrow?
It is
Where
here.
Is it? It is
It
here.
is here tomorrow morning.
Well,
so
there could be a
you're
straight.
opening all these new franchises
There,
and,
let's
and
see,
growing
no.
the gross margin too. I mean, how are you managing to control costs and
Oh, I guess when
manage
5
to
comes
squeeze
out.
that out?
We're able to leverage our
Fades
SG&A
missed.
because as we
Nice.
acquire a new brand, as we got to brand number 9 and brand number 10, we
Fake
only
bluff.
hire 4
Fake
people
bluff this
in
one.
the brand, and so your president, your chief marketing officer, people in charge of instructor training, things of that nature,
Oh,
are
dude,
all in the
4 ways
brand.
in.
But things like
Yes.
construction, accounting, finance, legal,
Easy
those
call
kind of
anything.
things are all leveraged SG&A. So about 85% of each brand's org chart
700
is
to
at a shared
3.4
services
mil.
level.
Sure.
So as we add more to the
Aye,
studio
dude. Ah,
base, right,
breaking
more
VWAP.
stores open, the SG&A stays fairly flat.
Yeah, I mean, I see you have a franchise agreement
Okay.
in France for a Club Pilates. I mean, you have a global footprint at this point, right?
Correct.
So here in the States, clearly, and what other areas do you see yourself in more?
So Asia Pacific is a big piece for us. We acquired Body Fit Training, BFT, which came out of Australia and you know, mainly operates in the APAC region, and so we've got about 300 plus locations just in that brand and others across APAC.
And also just the staffing. I mean, you talked about some of the crossovers with the different brands, and then maybe some of them overlap and you don't necessarily need everybody at the same way, but what are some of the hardest roles to fill these days?
I mean, from a labor
Because
perspective.
the labor perspective is a big deal.
Yeah, at the studio level, right, it's instructors and front desk staff, and then at the franchise corporate level, really as brand presidents and chief marketing officers and people like that as we kind of get new brands. But we tend to hire at the kind of third or second in command at each of the brand levels. Then as we acquire a new brand, we shift people from brand to brand, and so. Somebody that's number 1 at, Club Pilates came to run Rumble. Our old president.
Oh, yeah, Rumble.
Yeah, our old
That's a good
president of Stretch Lab came to run BFT when we bought BFT. So, you know, we bring people and kind of groom them within and raise them up.
Yeah, there was a Rumble in Midtown. I remember seeing it all the time and saying, oh, I should go there. Are you finding, too, that people now out of COVID, with the whole Ozempic, Wegovy, everybody's on this weight loss and they want to be healthier? And I mean, granted, you can do medication and get slimmer, but I think there's like a healthier mindset, too, that it's not just to, you know, lose weight, but to have better cardiovascular health. And I mean, there are some real great things behind it. And, you know, maybe they won't be eating as much packaged foods and junk, but maybe they will go to work out.
Yeah, we are seeing it in our same-store sales comp, as you've seen in the numbers. You know, we used to comp at high single digits pre-COVID, and now we've been comping 16, 17, as much as 20%, you know, quarter over quarter. So, you know, we're seeing the same-store sales percentage comp actually double.
Right. And what are some of the
We're all going for the straight.
I guess best sellers? I mean, you said Rumble, there's bar class, there's rowing, and I know there's something for everybody, but is there a space in the fitness area that seems to be the best, or the opposite side, the biggest challenge, how to introduce people to something new that maybe they don't know about?
Yeah, I mean, the modalities that everybody thinks of, right? Like yoga,
20% on GNS there.
boxing, you know, cycling, those
Getting
kind
close
of
to
things
back on the
are
channel.
Kind of the modalities that everybody's used to. The new modalities, or, you know, even things like stretching was a new modality a few years ago, and everybody said, well, you're going to open a stretching gym, I can do that at home, where people now figured out that we have almost 400. Yeah, we have almost 400 of those open, and almost 900 of those
Stretching
sold.
gym.
So really high AAV brand for us, and then we also have dancing and rowing and running, you know, which are more challenging modalities because less people do them.
Sure.
But still great brands for us to own.
And then with signups and stuff, how do you stay competitive against some of the other fitness names, I guess?
Yeah, I mean,
I don't like it.
Yeah,
Why do it?
I know who some of the other fitness names
One
are.
great way that we do it is with our X Pass. So you buy one pass, you get to go across all 10 brands. And that's something
that's a
that,
good
you know,
selling
competitors
point.
can't do because they only have one brand, right? And so it allows you kind of that flexibility, you know, around the different modalities as well.
Yeah, it's great to see you, Anthony. I'm so glad you're here, and good luck with Investor Day tomorrow.
Thank you so much
Sure,
for having
they'll ask you a lot of questions, but you're ready for them.
We
You
hope
gave
for
us a
'em.
lot of good outlook and news on this, and we'll watch for you ringing the closing bell today. Exponential Fitness, Anthony Geisler's with us. Thank you so much for joining us again on the show. All right, still having the second half of our show. New SEC rules that govern cybersecurity disclosures went into effect today. So what do we need to know?
Interesting.
And next guest will
Into
weigh in
effect
on
today?
The impact it could have on the.
Oh, let's cut her off. Dang, man, should have closed more puts at that low. I just didn't have enough buying power. Got in my head again. That's so stupid. I gotta get rid of that. I didn't want to close them because I'm like, I don't want to get an amount of buying power to get back into them. I gotta shake that. I can use other accounts if I need to. There's a good setup on the SPY. Guys trying to get their money back from me. Not a bad hand, but I'll fold it. It was suited. Called. I love the all-in. As long as I'm not in there, they'll go all-in. We'll do it either way. Pocket king, queen ace. Hearts. Oh, fives. Well done. You didn't do anything. Chopping all day is so annoying. It's like one of those things at the mall where you put your coin in, it spins around a circle and slowly gets smaller and smaller. The SPY is slowly getting smaller and smaller. You just watch your money just slowly go down the drain. Back and forth, back and forth. So the last second you try and catch it, you can't. It goes in to the abyss. Basically the stock market with options. Yeah. I coming back down to VWAP now. Barbecue down 7.5. All in, so.
Their holiday shortened week and well, good afternoon. But as you mentioned, kind of a mixed bag for the most part as tech is remaining strong into this
Bunch of calls.
Tuesday afternoon.
My slow plane scared these guys.
Shortened week and kind of a light start to the week in terms of eco data and earnings. I saw the SPX briefly below 4,500. I saw the Nasdaq down to 15,419. The Russell below 1,900. And you know, again, you mentioned here the S&P is coming off the best week we've seen since June. They were up around 2.5%. So just giving a little bit back here as we begin the week here. But the Dow relatively range bound, still contained, unable to take out the highs or lows that we saw in the previous session. But
you're trying to slow play me now. Watch. I'm gonna check it through though.
Investors are really kind of just trying to digest some of the jobs that we saw on Friday, get ahead of a week. Again, as mentioned, which is kind of light in terms of earnings and eco data. We have the beige book. We have a couple individual companies opening up their books to investors and traders. But even more so, I feel like, Nicole, the
that was a sad spy story.
Dominated more by
it was a true spy story.
And this big run up in crude, which is attracting some attention as well, and in many ways
based on
overshadowing
true
what we're
events
seeing in terms of the indices.
Understood. And you know, I was looking earlier and almost had to rub my eyes looking at crude here. 86.56 right now. It was above $87.
I can't slow play the guys again. They're totally. They're too scared. Look at all of them.
That WTI actually
I'm gonna
got above
try and act like I'm bluffing.
I mean, it spiked up to $88.07.
Bluff bet. They're not gonna call it though.
We saw it start to rally into the end of last week, right up to that 85, 86 level, taking out
bet the pop
highs
maybe
from earlier this year and getting back to levels we haven't
I
seen
got a couple
since the fall of
takers.
last year.
Oh, they want to see those
Not
cards.
what the inflation hawks want to see. And, you know, tying into
we're good.
A couple of the fundamentals that have been playing out here that have been behind the move up. For one, we've seen a couple cuts in production. That was the real story today, right? The extension of those cuts from
he sees
OPEC, Saudis,
now I gotta act like I'm bluffing and just go all in.
You've had inventories which are coming with larger
like,
draws.
no way does he have this
We've
again.
seen the dollar,
No way.
which, again, I mentioned some strength here today, but on the bigger picture, the dollar's been kind of weak relative to what we've been seeing as far as rates. Some of the other currencies are kind of weakening here today, and I think that's bolstering the greenback to near this 105 level. But also, you know, if you remember, again, I've been kind of focusing a lot today on the comments from
I thought he might.
Saudi
I'm not paying attention to how these guys are playing, so I don't quite know. Just know I took some of these guys' chips, and they're scared of
that are betting against upside price activity here, and that's when crude is down around 72. So here we are again today, $16 above that level, Nicole. Now off the highs of the day, but ultimately this ties into and has quite the ripple effect in terms of price at the pump on the rise, and as mentioned, directly into those inflationary concerns and fears. So I'm not surprised to see the indices a little trepid today as we kick off the week.
All right. Thank you for all of that. Good to see you, Ben Lichtenstein. Appreciate it. All right. Well, here's a new story to follow.
Kings again.
The SEC recently adopted new rules for companies about disclosing cybersecurity incidents, breaches, anything that we need to know, and those measures
have enough chips. No reason not to see the cards.
So
whatever.
Dr. Chris Pearson's with us, CEO of Black Cloak, to explain more. Why now?
Why coming back down now? Still in its stupid shop.
Well, it does. I mean, look, at the end of the day, the SEC has really gone ahead and done a few things. They've adopted new rules requiring that publicly traded companies disclose material cybersecurity incidents within 4 days of being found. But also what they've done is secondarily to that, said that you, publicly traded companies, have to ensure and report on cybersecurity risk management processes that are actually at your company. So helping to strengthen the companies, strengthen the governance, strengthen the oversight that they have. And really, this has been a long time coming. The first different pieces of guidance we had from the SEC on this was in 2011.
These guys
The
think I
follow-up
bluff. I
guidance
love
was
it.
in 2018. So this has been coming for about a decade, and it's now here. It takes effect today, passed on, and was
Who's
published
left? This
on
guy?
August 4th.
So as we've seen a flurry of
That'll put him in,
attacks
right?
recently, but really if you go over the last
Who was I
decade,
even in there
we
with?
can name a lot of them, right?
Absolutely.
Oh, he did call any. That's why I was so
all of those
fast.
prior companies in terms of where does cybersecurity get reported? What is the expertise at the board? Where's the expertise at the executive committee level and within the C-suite to understand that all of these companies, regardless of what sector you're in, regardless of whether a consulting company, an airline company, a retail company, that cybersecurity really is that fundamental underpinning of you and your business, and making sure, and this is what the SEC is doing, making sure that any type of interest on the financial condition or any type of financial impact that is material there, that shareholders, investors, and others know about it so that they can go ahead and make better, prudent
Yeah, almost
choices.
20% on GNS.
Right. And where does this fit with M&A deals?
That is
That's
neat.
something that you're talking about as well.
It is. It is. I mean, what's really interesting here is that you can argue that there's a little bit of an overreaction for publicly traded companies to come out in 4 days and say, hey, we've had an incident. We don't fully know what's going on yet, but we have alerted law enforcement. We have cybersecurity professionals that are in place. This can impact stock price. It can impact a company's reputation. The bottom line, it can impact customers directly because, of course, they want to know what happened to their potential information, but it also can stall out any M&A deals or transactions that have happened. Probably the one that we have
Queen,
the
king,
clearest line of
ace.
sight to is the M&A transaction
Cubs
with the
made it.
purchase of Yahoo. During that M&A transaction,
Got
it was
two pair.
disclosed that they had actually
Like the
succumbed
bluff catch
to
here.
3 different data breaches, at
Bluff
which point
myself.
in time that affected the actual price when Verizon went ahead and purchased
Bit
them.
of a bluff,
so
I
something
guess,
that
not-
will take place and will be included as part of the formula on all M&A
Straight out there
deals.
too.
And so at this point now, when you think of the different
pair of
companies, right, there's
jacks.
so many cybersecurity publicly traded companies. I know some are larger than others, but, you know, and some have different focuses, right? I mean, can you name some of the companies and some of the things that you think are beneficial to folks? We have some of them here, I mean, including Palo Alto, CrowdStrike, Zscaler, Fortinet. Those are some
Yeah,
of
he
the
had
names
2
that
pairs
are
on
up right
last hand,
now.
2 hands ago.
Yeah, these companies are all
I like this
companies
hand,
that provide products and services to large corporate organizations, some in the mid-corp side as well. Look, the bottom line
Especially
is
when they're
that
going heavy and they probably have
cybersecurity is now something that is 100% within the
high cards,
mainstream of
so if
corporate
you get a low,
governance at
low
every
flop.
single company. Yes, 98% of the companies in the U.S. are what they call small businesses because they're under
was.
500 people. But
Only
everyone
one
needs
heart.
the basic things, basic fundamentals in terms of cybersecurity. You're going to need the firewalls. You're going to
By
need
doing the VWAP
antivirus.
chop.
You're going to need all those different types of detective and engines
Bill.
for forensics and malware analysis and email protection. So all of those need to be built in. Cybersecurity companies are going to do quite well off of this further SEC guidance. But it's one of those things where this should be on the front page of every single CEO's guidebook, in the boardroom, and also something that is top of mind with investors as they seek to understand what is the company that they're invested in or a part of doing in terms of protection of their data, protection of their intellectual property, protection of their financials.
Look, and you know, what are going to be some of the repercussions too? Because, you know, these companies have a certain expectation to protect clients or protect folks, consumers, or whatever it is. You know, and I'm sure we've all gotten, oh, your personal information may have been compromised. I don't even know what to do when I get that. What am I supposed to?
She keeps changing her hair. Look at Nicole. She gotta let her down now.
Do you know what I mean? Like, no one even knows what to do because the next
Jeez.
call may put you more
I
in
don't have
jeopardy
anything, but I don't even have a
than
bluff
getting the
catcher.
note itself.
Yeah, but you know what's interesting is that from 2003, that's when the first data breach law took effect. SB
That could be
1386
slow playing
California
me.
law took effect, and essentially it's what I call a mea culpa law. Hey, we had
Giving
control or
that chips
possession
away
of your
here.
data, and now we
Oh,
don't.
geez.
Someone else may have control or possession of it, i.e.
Be
we've had
better
a data
fold.
breach, we've had an incident, security incident, and so that data's out there.
Back.
What that actually did was
You could pop
mandate
some.
that companies have to tell you, the consumer, about it.
Yeah.
Nothing more than that,
You
just
probably
tell
have a
you about
king.
it so that you could take defensive and protective measures.
Maybe not. Maybe a low
We're
pair.
now some 20 years in from
King
that
nine.
law,
Nice.
and it still is one of those things where people are receiving these
This guy
letters
trying to
each and every
bluff.
day.
Call
They
a
don't
bluff.
know necessarily what to do, but this is going to shine
Two.
a light on that whole area. It's going to shine a light on it from the top down at companies. And it's
Look at
really
their
going to
ease.
make those companies think about how do they actually use cybersecurity to their advantage in terms of competitively as a business enabler, as a business advantage versus their competitors, and how can they actually prop up more business and prop up, really, quite honestly, just their interest in protecting the end consumer.
Right, understood. All right, Dr. Chris Pearson, thank you so much of Black Cloak. Thanks a lot. Appreciate it. Okay, as we head to break, I want to talk more about what we're seeing in energy, oil, crude. You know, Ben was just talking about $88 the barrel. Now what? We'll be right back.
Now you get higher gas prices. This dude, why do you go all in? I should put them all in. Ah. Again. I gotta put them all in. Give him a little taste. Let him see. I mean, oh, he got 3 days. I just wasn't thinking. Dude, yeah, should have put them all in before the flop. Silver one with kills. Alright, 15 minutes to power hour. Barbecue down 9.16. Genius hanging out 17.5. GME consolidating, built a nice bull flag. Same with Fubo, 11.3. I wish I could slow plays right here. Take it, buddy. Nice 2-pair. Yeah, GNS popping a bit. We're watching it. Almost got back into its channel. Fickle one strikes again. Still pretty far out of its uptrend though. Okay. I would have taken it. Check out them plush Rhinos. Yeah, maybe. Last hour. Minutes to power hour. We'll see. Big bet. Oh, he's checking it around. All right. I'll let you see my. You had 8. Heck. Trying to get me to go. Bye, climbing up more here. Getting ready for power hour. Maybe breaking out to the upside. Yeah. Yeah, whatever. Is that a call, Amy? Pocket something. Awful kicker with this. Call it. Do it. Called. Oh, queen. And nothing's going for the high card. You gotta pay to see the cards, man. Gotta pay to see the cards. Wow. Don't slow play him. Why? Too easy. Called me with high card. Re-raise that. All in. Not a good flop early for us. And yeah, whatever. Have fun. Four minutes. Awa awa. 10-6 offsuit. What is this guy doing? Tilting. There we go. At least one guy. One guy wants to see the cards. I don't really want to go down with this. Hope to just take it down right here. Okay. Couple tens. I won't slow play this time. How about that? Just keep it in the pot. Put this guy all in. Half pot. I gotta put them all in. Do a half pot. That'd be stupid. Close to all in for him. What does he have? Pocket kings? Whatever. Three minutes. GameStop close to the highs of the day, up 4.5. What earnings brings? Big bounce off of that low though on the daily. You guys play it. Fun. Started power earlier with those high stakes bets. That was the right play. Oh, the non-slow play? I mean, it's just different ways to play, man. If there's like a right or wrong there. Made him fold, which probably could have got more value out of it. Maybe a smaller bet, I don't know. Getting ready for power hour already. Bouncy. $132. Isolate these guys. See if we can. These guys want action to watch. They're gonna want it. Yeah, definitely. Oh. He called, yeah. He wants his chips back. Wow. Wow, everyone had good hands. Look at that. Even the 9-6 beat me. He called with a 9-6. That's great. As I'm saying, I need to up the blinds. People with bigger stacks play a little more serious. Everyone's getting frothy from that win. Ball call. Power hour. Here we go. It's like, what do I do with all the chips? I guess I just go all in. Like 5, 10. Oh, this poor guy. Oh, no way. I thought he almost had it. 15% on GNS. SPY coming down for power hour. Back to VWAP. %12 on Fubo. You are very annoying. I had guys like really pissed off at me the other day. I on my phone and doubled them, both of them up a couple times. Then I was just raising everything pre-flop. They didn't really know what they were doing that well. They were both just going back and forth like, "We're gonna get you, man." I kept just slow playing them because they were so tilted. They would just play super aggressive and. But then I bet big pre-flop, and they just, yeah, it was great. It's great getting people tilted, and then just. Jeez. DXAI is up 45% now. All that. That guy's gone. He kept going, huh? Unfolded, yeah. SPY back to VWAP now. Barbecue 7.6% down. A lot of options there. None of them are landing. Pair 6, pair 5, what the heck? In there. Oh wow. Hoping they think I have something pre-flop. Oh dang. What are they calling my bluff? Give it to him. Did good. Queen 6, well done. now. Jeez. I'll just get in line. Buy now below VWAP a bit. Rude. You just leave? That's great. That guy just got away with murder. I'm out of here. You don't have a problem. But that's what he told himself right when he quit. I think he told himself, I'm calling no matter what this chump has. Calls his bully bluffs. Oh, and here we go. Waiting for me to get out of there. $0.24 on barbecue. And down 16. A's. Spade just got there, got the A's. Why below VWAP now? Dang, dude. Yeah, I'll give you the bluff. It's 610. Here's your spy flush. See it breaks out of this wedge here. Been in all day.
If you think about, the jobs market, which is finally starting to moderate, now we have a bunch of strikes going on, or potential strikes across the globe, not just in the US. So it seems like, again, for every point, there's a counterpoint, tons of conflicts. We're seeing it in the bond market. We're seeing it in the stock market. And you just mentioned large cap tech versus everything else, versus banks, versus utilities, versus small caps. And again, we're seeing these types of conflicts throughout our investable universe.
The investable universe really focus on income, at least one-year funds, PMEFX, the income-driven fund
still
there.
just chopping around.
Does that give you some ability to kind of find a middle ground where, if you buy bonds that are 4.5% or 5% or whatever, if you buy a 2-year, even shorter, right? If you buy even closer, short duration, and you lose, you still get to clip your coupon, you lose some principal, but unless there's like a massive black swan event in bonds, like worse than maybe last year, are you good then? Can you kind of just hit the buy button and relax?
Last year was historic, Ali, and that was a massive decline. If you look back, I think bonds have lost money over the past 3 or 4 years, and that's pretty odd. So in PMEFX, our strategy is super flexible, which is great. Last year, we were super short duration. We avoided the great majority of the losses experienced in bonds. Our fund was down 4%.
Not yet.
The benchmark or the category was down about
Not
14%.
yet, Bubba.
And
Maybe for the 10 minutes of Fugazi, but at that point, your dailies are
so on the corporate
basically
side,
worthless.
we all know high yield's done really well. Spreads are really tight. But what you're not
Unless you
seeing
just got them
is
5
the
minutes ago.
deterioration in fundamentals for over-levered credits. So Triple C, for example, I would argue is pretty stretched from a valuation standpoint, especially seeing. So one of the big things globally, Ali, that's pretty common across the board. There's been an overuse of debt capital. Lacey Hunt loves to talk about it economically, but we're seeing it on a corporate level. And we're seeing bad balance sheets get absolutely punished with their debt servicing costs up 50 to 100 to 200 to 300% year over year in the past quarter. I want to stay away from those companies. I want the companies that are earning income and have more cash than debt on the balance sheet, and I can still get 6 or 7 and 8 or 8% in those types of names.
I'm thinking companies that have been around for a while, that have demonstrated cash flows, that don't necessarily trade at the lofty growth valuations of like an NVIDIA, but some of them maybe have changed in their value proposition over the last 6 months, like an Oracle or a Broadcom. Like nobody had those on their list as big winners, but they are. I don't think anybody had them on their list as losers, but you kind of have some of these big legacy, almost value style names, which makes sense to me. But then you get a day like today with Tesla and stuff, and even NVIDIA at this point, trading like 200 plus times earnings. How can we make that separation?
CXAI still moving, 61%.
Size and quality versus those that have no room for error.
And this is why I love to talk to you, because you always frame things the right way. So if you're buying NVIDIA today, obviously you're paying a pretty hefty price. And gosh, it may work out, but I don't like to pay that price. I like to get things for free. So today, for example, we're buying a small cap little energy company that has almost $4 per share in cash, and I'm paying $6.80 for it. I'm getting it for roughly, $3 on a net basis. Like that's what I like to see with no debt. And it's paying a nice dividend. So there is that. So to your point, if you think about the largest of the large caps and the valuations, the market overall does not look that way throughout the market cap spectrum. And that's our opportunity as income investors. But you have to be able to manage a strategy that has that flexibility. And luckily we do.
Okay. So when it comes to sensitivity to rates in the market, It seems like there's two areas. We saw that the tech sensitivity to rates is real from last year, but then now this year it's getting a little bit mixed. Like you got Oracle, you got Broadcom up, and then the other end, the market gets really concerned about regional banks as being tied to rate risk. Any thoughts on what's the true rate risk? Are those just generally groups you want to avoid as a whole?
I do think where I'm most concerned, if I think about companies and how they're going to make money, I am most concerned about the financials right now, about the banks and next quarter's earnings.
Won with it.
Because
Nice.
nothing's really improved from last March. You know, the front end of the curve is still super high. There's still deposit flight. We are still seeing challenge for loan growth. And so obviously the big banks benefited from the smaller ones. But broadly speaking, that's not a healthy
shuffle the deck here.
Scenario that we're painting right now for financials. And I think that's why the KBE or the KRE, that's why they look like that today. And that's a completely different growth story than a Tesla or an NVIDIA, for example.
I don't know why I raised that.
Right now, George, what do you think is the tiebreaker or the potential kind of incremental change for the Fed's outlook that we need to watch? Is it pure labor at this point, to your point about the strikes and stuff? Because to come back to the Fed odds, a lot of people are trying to make their decision on what they do with investments, pensions, et cetera, based on if the Fed's done or not. And when that decision is top of mind, we try to interpret everything through that lens. But we just heard from the man 2 weeks ago at Jackson Hole, and he sounded like he was very much on the fence.
Yeah, and I think he should be, because I think if you take history as a guide and as a lesson, if you go back to the 70s, there was that, looked like at one point we had inflation beat, and then it resurged, and it really surprised a lot of people. And so they had to fight it again. I don't think Powell's going to want to fight inflation twice. And so I really think the key right now, just in the very, very short term, if we're not thinking too long term, we really have to watch this spike in oil and to see if it goes from 90 to 100, because what will that do? That will, number one, hurt consumer confidence economically. But number two, from a Fed standpoint, that might increase inflation expectations. And they don't want that. So again, and oil is a tricky one because it's a global commodity. And you're seeing it's not really controlled by us and our production, which is actually pretty good. It's being controlled by overseas supply right now, at least in the near term. So that I think that push and pull right now between oil and inflation expectations is pretty important.
3% on CXAI.
George, I want to talk about a chart just real fast. We got about 90 seconds that I think you grabbed from maybe the Bureau of Labor Statistics. It looks at the age. It's like a demographic breakdown of financial professionals and their experience with inflation. I think it's pretty cool, and I haven't really seen the inflation chart overlaid like this. So good find. Tell me about what it means for you.
I think it's incredibly important. So psychologically,
maybe
really,
should raise there.
Markets, Ali, for our age. I mean, I'm not 50 yet, but I'm getting there. And if you think about it,
I don't really want a slow place. I don't want more cards to come out
with inflation. So what is our history? Our history in finance has been, inflation coming down for 40 years and yields coming down for 40 years. So I think there's this implicit assumption that either everything will just turn out okay and companies won't go bankrupt, or, again, or inflation will just magically go away. If inflation is sticky, we have a set of circumstances to deal with, and corporations who've made bad decisions from a capital allocation standpoint.
Yeah, got his king.
They are going to pay the price. And if you think about Rite Aid recently,
what hit a straight? Oh, I didn't even see that connector.
Recently,
wow.
There are a lot more companies that have way too much debt on the balance sheet because they kept being able to refi at lower rates. Well, that's over, at least for now, at least for the near term. So I think that's a big thing to contend with, both as an income investor.
Make it shorting.
I clearly see that
flow.
There's so much value in going to the companies that have a lot of cash on the balance sheet. It sounds obvious, but really you can take a lot of risk off the table and benefit from the higher rates versus suffering from them.
Okay. Great combo, George. Like the perspective and some good charts in there too. Appreciate it. It's always good to catch up.
Great to see you.
Likewise, George Cipollone at Penn Mutual Asset Management. Watching the move in crude oil like a hawk. I'm also watching some pretty wild video out of Vegas following floods. And it comes right after a pretty good couple quarters of recovery for the casinos. Companies like MGM have been doing real well. But then they stumbled on earnings, and now maybe they'll have to deal with some travel effects possibly. We'll talk about it next. Stick around.
Pocket 8's taking it home. SPY gave us nothing today. Nada. Consolidation. I did get a surprising move up on GME though. Wasn't really expecting that much. Earnings exuberance. Little bull flag there on the breakout. BBBYQ consolidated as well. Came down 8.25. GNS with its random pops. Went up a little bit. Hawaiian down 16. Got Dish up 2. Run is down 1.5. Beyond down 2. AMC up 3.5.
The Vegas recovery is casinos printed some pretty big revenues, but now it's got massive flooding happening in Vegas. Chad Bannon joins us, managing director.
Yeah, Burning Man people got like trapped out there.
Chad, good to have you as always. So let's start kind of with the news flow, with the crazy weather events. I feel like it's like every 4 months now I'm seeing a video of like a ceiling falling through in Vegas. I mean, is this going to have an effect at some point?
Ceiling falling through.
Yeah, thanks for having me, Oliver. Yeah, a lot of weather effects in
New
gaming
Finbiz
right now.
design?
So obviously,
Nice.
Summit Properties, as you mentioned.
Alright, 30 minutes to
the
close. Thanks
heat
guys for your support today.
in
Thanks for your
North
thumbs up.
America has certainly been
Had some
at
fun
record
playing
levels for
some
the past couple of days. That
Texas
probably
Hold'em
affected
through
results
the
this past
SPY
weekend
chop.
and probably will this week. And then in Macau, you had a typhoon this
Macau.
past weekend. So every time we start to get really good momentum, there is something that Mother Nature, kind of hampers the growth that we were expecting here.
I guess I missed the typhoon. So, I mean, it's to a certain degree, though, the real calamitous effects, it seems like in Vegas, like when I'm talking literally about like roofs falling through and stuff or parking lots flooding, it feels like that's mostly like older establishments. And I mean, you don't see that happening at the Encore.
Yeah, it's a good point. I'd say, in general, we think about CapEx that needs to go back into these properties somewhere between 2 and 6% of revenues. Now, in the hotel industry, just because the way that the model is set up, the franchisors or the owners of those properties have to continue to invest, right? So in the casino industry, that's been something that hasn't been up to the same levels as historical periods. What we like right now is we're seeing nice investments from MGM, nice investments from Wynn. Wynn's probably on the fastest cycle. They replace or update their rooms roughly every 7 to 8 years. Other companies like MGM and Caesars probably do it every 10 to 12. Bellagio is currently going through a renovation right now. But yeah, we certainly don't want to see these risks, and we hopefully won't see too many of these infrastructure risks going forward.
The momentum is there, right? From your report, top line, 8% for July.
Thank you,
That's
comment for
total
the algos.
strip revenue.
Thanks, Tasty.
Yes, that is gross gaming revenue. So we've seen mid to high single digit growth on gaming year to date, and that was also seen in July. On the non-gaming side, we're actually seeing higher than that. So room rates are
XXII
up
back up to
double
VWAP.
digits, and we expect that to continue into the third quarter. And then obviously in the fourth quarter, when we have F1 in November, that'll be a big boost to non-gaming and also gaming revenues.
Oh, so the construction then for related F1's finally going to be over in Vegas? It's got to be worth something.
Yeah, we'll be out there with some investors next week, meeting with companies, and we have heard that some of the areas have gone from 3 lanes down to 1 lane. So to expect traffic ahead of the November race here. So that'll certainly be a slight negative in September and in October as well. But what we're seeing right now from a visitation side, going back to the results that we published in July, 3.5 million people flew into Vegas, and that's back to peak levels in July. So we're back on about 40 million people are coming to Las Vegas on an
Fine,
annual
come down
basis
here.
to look for these unique luxury
You
experiences.
could have retested a low on the day.
We continue to see them, right? The Oakland A's are most likely coming to Las Vegas. You obviously have Allegiant Stadium is fully programmed after being open for a couple years, and now you have the Sphere opening with U2 and other concerts, and that is that's in addition to what I mentioned from F1. So really cool luxury experiences that'll be in the next 6 months here.
Yeah, big calendar ahead for Vegas. All right, now stock-wise, I feel like most of our conversations last year have been favoring MGM, which has been the right call. I mean, MGM, even after pulling back on earnings, up 30% on the year, beating Las Vegas Sands, but seems like a little bit of a, I don't know if it's a misstep fundamentally, but the market's treating it that way since earnings. What's the latest here? And correct me if I'm wrong if that's not still your favorite name of the group.
No, that's a great way to put it. So prior to this quarter, gaming operators had beaten about 80%
yeah, a little fictional GNS had a pop today.
This last quarter, 75% of companies
Off
missed.
that dollar level.
MGM was right in line. So the sector has underperformed the S&P in the last month. And in the last 3 months, MGM is still outperforming year to date, but it has pulled back here. You know, we continue to like digital first, Vegas second, Macau third. Nothing has really changed there, and we still think MGM has the right ingredients for a good stock call here. Our upside for, I'd say, our top 5 or 6 large cap names are between 25 and 40%. So we're no longer thinking about, 50% gains, but we still like MGM here. We have a $60 price target, so that's 30%. Or I'm sorry, 40% upside here. Second would be Caesars. That's a $68 price target, 27% upside. On the Macau side, we like Las Vegas Sands. That's also pulled back a little bit, $70 price target, 33% upside. And then lastly, I'd mentioned DraftKings, obviously the digital leader, $38 price target, 27% upside as we kick off the Chiefs and the Lions in 2 days for the start of NFL season.
All right, DraftKings, I guess, is really the winner. 170%, and that's not a gap that needs to close between them and their peers.
DraftKings is a 13 billion market cap name. What we found is as this name has continued to grow in terms of size and market share, it's just opened up to a different type of investor. Generally, I'm speaking to the gaming, lodging, leisure investors, but given the growth that they're putting up and the expectations of them to continue to grow 30 to 50% on the top line and the bottom line. Now we have software analysts, internet analysts calling us, asking us about the story. So we think the valuation can continue to hold up here. Obviously, if FanDuel or Flutter decides to list in the fourth quarter, I think that would help having another big company in the space. But at a 13 billion market cap with the growth that they're putting up, we still think there's some nice momentum even after the rise this year.
All right, great stuff. Thanks for the details and good knowledge, not just of the stocks, but the happenings, the calendar. Appreciate it, Chad.
Thanks, Oliver.
All right, Caesars next to MGM among the favorites. DraftKings, of course, not to be ignored either. When we come back, a few other travel-related plays in Tom's Options Corner. Airbnb, a bullish trade spotted in the options market following its addition to the S&P 500. Big rally there.
Definitely not me adding to it. You're going, still going short on the earnings, huh? Been a high day like all day. We got bull flag. Bullish on earnings? Oh. Tomorrow might continue up, but what happens after hours? Next day.
Operations, they cut estimates for mining. That's why you're seeing it down. That's the reason for the downgrade today. To get a price target hike out of B of A, though, at that point. But geopolitical factors, including dependence on unstable supply chains, Russia's dominance in this space, driving the need for Western nations to kind of secure their own uranium supply. That's why we've seen the rally in the stock. But on the call side, even with the downgrade today and the little pullback, they were in there buying September monthly, so they expire on the 15th. They bought over 15,000 of the 38 strike calls. Paid an average debit
still
of just about 40
choppy
cents.
range,
not a lot
man.
of option premium. You've only got
Never
10
gave
days
it
till
to us.
expiration. But that break even at 38.40 over the next 10 days, it's about 3.5% above the current share price in there, with call volume about double what we've normally seen over the last week of trading. So yeah, downgrade.
Tomorrow continuation
kind
day.
of offsetting here. But demand for
we've had like
uranium
3
remains,
chop days in a row now.
and the stock's up over 60%.
Been at the top here.
It's going to continue to move higher or reverse.
CCJ, baby. Can't be stopped. Oh, man, this thing was like a meme trade for a while there during 2021. I guess
it
not.
was.
Certainly outlasted everything else.
Big short interest in there for a time, yeah.
I mean, look, real implications.
No, I'm
for
not
sure.
playing GME
real life
earnings.
stuff happening, not like some of the other craziness from back when it was first
No reason to be
finding its way onto people's
thinking it's
watch
going
lists.
one way or the other.
It did become a pretty popular trade, but I guess it still is to some degree if you spot big options volume happening in
Well,
there.
who would have thought 5 years ago we're talking about they're building, new nuclear plants, right, for energy. It's one of the cleanest energies out there, and this is an unstable, type of product that they're mining, but they've had a good run this year.
Okay. All right. Of course, shout out to former director Roberto Rios, his favorite trade back in the day. Is that guy, Roberto, if you're watching? Nice
CCJ,
trade.
yeah.
Yeah, CCJ, he was on top of it. Okay. Last trade in Starbucks. What's going on here?
Well, the stock's lagged this year, down about 2% in 2023, so it's lagged the overall market pretty heavily. It seems like they had roadblocks from unionizations, some of the other missteps in execution. Howard Schultz was back in the mix there, trying to right the ship. And if you look at some of their data from their last earnings report, loyalty reward program, 90-day active members in the U.S. increased to 31.4 million. That's up 15% year on year, so that's a bonus. They beat on EPS, they beat on revenue, or revenue came in line, but global comparable sales increased 10%.
Bouncing back up to VWAP.
And that's based on the back of average ticket price increase also, but then China's starting to come back online. Kind of gave them a boost, but the stock's still underperforming. And somebody taking a play here in the option market, thinking that we're going to see some continued weakness in here through the October monthly cycle. You won't capture earnings. That'll be early November. But a trader bought over 3,000 October 97.5 strike puts. Paid a debit about 241. These are basically at the money puts. So that break even of 95.09 to the downside over the next 45 days. That's about 2% below the current share price. So not a lot of option premium in here, even though the stock's kind of consolidated and down 2% for the year. Implied volatility with the VIX at these levels at or near 52-week low. So you're not paying a lot of option premium, but definitely a bearish stance here over the next month and a half, thinking they're going to see some more weakness.
GNS coming back to VWAP.
All right, pretty weak stock, so not shocked to see it. Thanks, Tom.
Yeah.
Starbucks down another % today. When we come back, let's refocus on the big story of the session, which is WTI and the move higher. We're going to trade that with Scott Bauer. We're also going to talk about airlines, which are under pressure today. Maybe some of it coming from the price of crude, some of it also from United ground stoppages.
Oh. I'm above VWAP now. Hey, Busy Bee. On after hours? Wait, what? Any thoughts on after hours? Is it harder to hold a stock with such a good move up? Down in after hours? Very confusing. I don't know what you're talking about. Do they have earnings or something? What's going on after hours? I mean, me Mullen kind of sucks. Very sketchy. However, did make this RSI divergence, which a whole lot. Down here. I don't know, the chart's weird. Needs to break this resistance here. Keeps not breaking it. Just a oh, short saying hold it down in after hours. There's a pop on barbecue. I mean, it's a different market. You know, it moves over to a different after hours type market, and you know, the parameters and stuff are different. Harder for them to hold it down potentially. Yeah, we don't have options being traded, so that's kind of behind their back. Don't have liquidity, so maybe, I mean, that kind of goes both ways though. What else? Not really ever thought about it, but I could see the argument for it. Remember what I was talking about earlier about the SPY? Here it is. There's your option. The hole is 0. End of day. SPY. Shopping all day. In case you didn't know what I was talking about. SPY back to VWAP there. After I'm Adam Mullen, I'm following you guys.
Have rate steady, and they were one of the most aggressive. The dollar rise to me right now is more a function of other currencies just being weak, not so much that everybody wants the dollar for those fundamental reasons, but only because other currencies are weak. Now, you know, remember, the dollar was left for dead, what, a month, 2 months ago? You know, people thinking it was going to be sub 100 here. 104.85 was the high earlier today, 6-month high. Watch for 105.60.
Yeah, market's actually
that is
held
really
up pretty well
the
how the
next
dollar
hurdle.
has been today.
If it breaks
big
105.60,
bounce.
Oliver, all bets are off.
GNS,
If you
kind of a
look
bounce on
technically
VWAP.
at these charts here, boy, there's a lot of dead space above there.
All right, nice. Thanks for the trade talk. I always appreciate Scott Bauer. Good stuff.
Thanks, Oliver.
Let's get a developing story update from Renita Young.
10 minutes of
senior markets
Fugazi coming up
correspondent.
soon.
Keeping eyes on the airlines after United had a brief ground stoppage. Shares are trying to come back now. Renita, what happened?
They are trying to come back, and so we had been seeing reports that it was a technical issue, right? But another report said that the airline was actually not able to connect to dispatch through the normal means, and that came from a separate air traffic control notice. But right now, the shares are down around 2% or so, and that's much better than earlier when shares were down around 4%. And this grounding lasted for about an hour and 15 minutes tops, so it was not that long. Right now, the company says that it's working to get impacted customers to their destinations as soon as possible. And right now, also, they've, just as I said, come off of those lows. And when we just take a look at it, this is a pretty resilient stock. It's been resilient all year. Year to date, it's up around 29% or so, and even up from that yearly intraday low
coming back
by
down.
about 53%.
Round and round we go.
So on a whole, pretty resilient. Not too much of a disaster at all. Definitely not like what we saw with Southwest happening last year in the holiday season, Oliver.
Yeah, true. Okay, market definitely sensitive to anything for airlines right now that doesn't go perfectly their way. We've certainly learned that. The shares trying to come back after that dip. Thanks for the update, Renita.
Of course.
All right, coming back about 10 minutes till the bell. Our Charles Schwab team joins us for the big picture discussion. Mostly, I think, on bonds, inflation, and what comes next from the Fed. Liz Ann Saunders and Colin Martin next.
Up, down 7%. Buy, getting ready for Fugazi. Leave a dominant hybrid, 25%. Lab has earnings today, but after hours. Is can 10 minutes Fugazi maintain the restraint on SPY? Charge point for tomorrow. What is the news for this drop? Is it really just that one family suing them? Let's see. Minute finger slap. Well, at least on a choppy day, we're able to practice some hold'em. And maybe get into maybe some Tournaments. That'd be fun. Just right there, right at that first little low. 5-minute finger slap coming in. Oh, Express had a reverse split. Oh no, Express. The beginning of the end, maybe, for Express. Earnings tomorrow, maybe it'll rip. I think that's their first reverse split. KBNT. I've been trying to sell this like every day. Just don't get filled because I'm trying to get a good limit buy or sell. Camping World down 7. What is that from? Pretty big move. Getting close to the low of the day. Your slap. Off to find some lunch in the woods. See ya, Jay. Thanks for the support, man. Yeah, we could get a big move. That's true. That's true, Bubba. True. I get my powder. I get my powder wet every day. Not sure how that analogy works. Fortunately, the biggest moves are usually in the extended hours, so if you're holding something overnight, the daily usually isn't as big overall. I mean, you can get big intraday too. Anyways, yeah, maybe see something big. It went fast. Yeah, I see. Went fast. I started late. That added to it. I can just keep starting late, and the day will go by fast. How about that? Get that consolidation on spot. I didn't do any trades today. Just the daily SPY options. Yeah, didn't do it well. I showed up late, of course. Wasn't mentally prepared for his first trade, which could have been a short. I was looking more for a long on the handle. Didn't give it. I don't even remember where did I open. I don't know. I got chopped out of profits. Actually, I never really had profit. Got chopped into losses. Almost made it back to break even on this dip. Closed some. And I closed all would have been a smaller loss day, but ended up closing till up here. So, oh well, SPY is back down by Celsius. They have earnings coming up. Why should I buy Celsius? And it close to the low of the day. Look, all day. Last 10 minutes. That's when we get their test. I was saying that 3 hours ago, 4 hours ago. Maybe the last 10 minutes. Bada bing. You're low on the day. Look at that flush into close. A lot of sell on close orders, it looks like. I would chalk that up too. Sell on close. It is public. Is it Celsius Holdings? Yeah, they talk about it on PD like all day. They love this stock. Makes sense. It's like it's the second energy drink stock on the market. And the first one is the best performing stock of all time. So that's why this second one in the industry would be pretty good. Pretty good, I guess. Yeah, go buy it, Bubba. It's CLH, I think. Yeah, CLH. Done well. Yeah, I should say so. Last 3 years, it's done quite the percentage. $3,000%. Thanks so much, guys. Appreciate the support. Hope you had a good long weekend. Back sharp. They chalk it up to a long weekend and taking off the cobwebs. Be back at it better and stronger tomorrow, more focused. But yeah, thank you. I appreciate it. And Publish, thank you for your donation this morning, man. Very thoughtful. Nice. An element not known to mankind. Yeah, buy it, CLH. It's at a really high price though, it seems like. And for your likes, what do we hit? Nice, 25 likes on the board. Thanks, guys. Appreciate it. See you on Discord. See you on Twitter. Lords, Bubba. Thanks, guys. 9:15 sharp. All right, well, hold on. Easy. Okay. I start the stream at like 8:30 sometimes, oftentimes. At 9:15 this morning, I was in the emergency room, so couldn't start from there because I stream from my computer, and my computer's pretty heavy and not very nice to carry around because it also got to plug it in. Thanks Jay from the Bay. Thanks Guts. Thanks Busy Bee. Boogie. Praise. See you guys tomorrow. Make sure and tell your friends about tomorrow. You show up for stream. We're gonna make money on SPY trades. We're gonna practice some more Hold'em. We're gonna watch barbecue rip. Appreciate it, guys. Sub up, like up, comment down. Happy money sticks around. See you later. Peace out.